Angeles suburb, resigning after agreeing to plead guilty to acting as an unregistered foreign agent for China. Eileen Wang admitted to posting pro-China propaganda at the direction of Chinese government officials. She could face a maximum penalty of 10 years in prison. The FBI alleges that she used a news website she operated to publish pro-China content between the years 2020 and 2022, including an essay denying genocide and forced labor in a province in China.
Exactly where that is. It's right in the neighborhood right next to Monrovia, right next to Arcadia.
Meantime, it is closing in on 7 a.m. We've still got a couple minutes to go on the East Coast here. You're watching Squawk Box right here on CNBC. I'm Andrew Sorkin along with Joe Kernan and Becky Quick. A bunch of big stories, though, this morning to talk about. The April Consumer Price Index, that's going to come out at 8:30 Eastern Time. Economists expecting that index to rise by 0.6% in April, month over month. Year over year, the gain forecast to be 3.7%, with the core rate excluding volatile food and energy prices coming in at 2.7%. And President Trump says the ceasefire with Iran is, in his words, on life support. That followed the president's rejection of Iran's counterproposal to U.S. plans to end the war. And you can take a look right now at oil prices. WTI crude up about more than 3.5%, about $101. Brent up about 3.5% as well, up now close to $108 a barrel. And then there's this, perhaps to be expected at this point, eBay officially rejecting Ryan Cohen's buyout offer. eBay's board saying it concluded the proposal is neither credible nor attractive. This was GameStop CEO Ryan Cohen when he joined us to discuss that offer last Monday.
It's half cash, half stock.
I hear you. I'm just saying that math doesn't get you to the price that you're offering.
So, Ryan, that's a pretty straightforward question. I don't get it. Like, where's the rest of the money coming from? Andrew laid it out pretty clearly.
I don't understand your question. We're offering half cash, half stock, and we have the ability to issue stock in order to get the deal done. But the full details of the offer are on our website.
But you're on our air. We thought we'd get...
So, but I don't understand your question.
And apparently the board of GameStop, or I should say of eBay, maybe didn't understand either. They do say, and go on to say that, as we said before, not credible nor attractive. They say they take into account eBay's standalone prospects, the uncertainty regarding the financing proposal, the impact of your proposal on eBay's long-term growth and profitability, the leverage, operational risk, and leadership structure of a combined entity, the resulting implication of these factors on valuation, and GameStop's governance and executive incentives, something else we talked to Ryan Cohen about. I imagine this story, by the way, is not over. It is worth saying.
The ability to, yeah, we have the ability to issue stock. You know what they ought to do?
What's that?
For me, I'd buy NVIDIA. I would issue enough GameStop stock to buy a really incredible company why settle for eBay?
Go for it.
I mean, if you have the ability to issue stock that you can use as currency to buy a company, I'd rather have NVIDIA, wouldn't you?
I mean, the question is Ryan Cohen able to get enough? And I've always wondered whether this is part of the thing. If he could get enough of the GameStop shareholders or sort of retail community to start buying eBay shares.
Which, by the way, he does own a stake.
Right, he owns about
substantial stake.
Well, but he owns a 5% stake, but nominally through all of these options and derivatives, right, not through actually genuine ownership, which then gets into a separate question of can he vote those shares, and how does that exactly work? I don't know. There was a whole bunch of people out there saying, well, he might have made a fortune off of eBay shares as a result of the pop, but if that's true, and there was a pop, briefly, we can go back and look at the stock. If he sold them in the immediate aftermath, well, not only does he not own any, no, then all of a sudden you'll have allegations about trying to manipulate the stock.
Right.
So it's a very complicated place to be at this moment. But he clearly does seem to like eBay, and I wonder whether he'll be around the hoop for the foreseeable future, either making hay out of some of the governance problems that have existed, by the way. And he's not wrong, by the way. eBay has not been, the greatest performer in the history of performers. So, it could, arguably, you could shake that company up. You could do all sorts of things to that company, but I'm not sure this, at least as structured, is the answer. We'll see. In the meantime, AI's demand for energy has prompted a need for data centers around the country and a backlash among some communities where they're being built. Joining us right now, Chad Williams, Chairman and CEO of a new data center venture, Q2 platform in the Quality Growth Companies family. He's also the man behind QTS, what is now considered one of the largest data center platforms in the world and is owned by Blackstone. Good morning to you, Chad. It's nice to see you.
Morning.
The growth is just explosive in terms of what we're seeing around the country. How explosive is it? And most importantly, I think we're all trying to understand, how long do you think this lasts?
Well, thanks for having me this morning. It's a big growth horizon ahead of us. We've seen a massive uptake of infrastructure across the country, really across the world. And from the viewpoint I had the last number of years, we don't see any real slowdown in the opportunities ahead for us, really driven by energy infrastructure and the opportunity to build in communities where you can build the right bridges and the opportunity to impact the communities in a positive way.
Look, I think the reason I asked how long you think this goes on for is, at some point you have to think that if there's just construction going on, as far as the eye can see, it also makes the math of all of these companies much more complicated, I would imagine, especially for the folks who are paying for these things. At some point, I would think they think, we've built the infrastructure. It's called infrastructure because you put it in the ground and hopefully it actually does something for you. If you have to keep building it always, this becomes a shockingly capital expense, a huge capital expense for what were capital-like companies.
Yeah, I think what you have to separate is in the noise in the system is there's a lot of announcements. I mean, I spent the last 20 years building a company that did a lot more about doing things versus talking about them. And from that standpoint, if you sift through the announcements, it could be overwhelming that the amount of infrastructure that's getting built is happening at too fast a pace. I can tell you from the real conversations and the customers that I've spent the last 20 years growing and working with and talking to, what's ending up in their deliverable basket of opportunity to plug GPUs in and to build the infrastructure. And it's not just AI infrastructure. It's what I call advanced manufacturing, or infratech, where infrastructure and technology are coming together. So it's not just the AI factories demand that we're seeing. It is a bringing back and reshoring of America to be able to take the same power and infrastructure and provide kind of the next 250-year roadmap for building and doing things here in America. But if you sift through all of that, the advanced manufacturing, the AI factories, there is not enough getting through the queue or getting through the communities to be able to build to have an immediate or near-term overbuild. I think what you're seeing is that as far as 2027 and 28 goes, there's just not enough connected load capacity in zoned and opportunistic areas where you can bring those things together. So the larger point is, are they going to build too much? I don't know. They're super smart. They're the largest companies in the world, and they have real products that they're trying to deploy and grow their businesses. So I think, will there be some investments that don't get treated equal because people went out and bought things that really didn't make sense, but everybody was excited? Yes. But the real demand, the real players, the people that know how to deliver and have the relationships and the people and the opportunity and the skilled people to do it, they're going to be able to sell what they have over the next couple of years.
Let's just speak about the sort of NIMBY of it all, not in my backyard situation, because there's a lot of districts, neighborhoods, and others where people say, I don't want this stuff here. I know you got involved. There was a bit of a controversy where there was a town, an affluent town, that didn't have access to water. They blamed you because they said that you had the water. There's other places where people feel like their electricity bills are going up. And so there's a sort of a broader, almost political question about the popularity of these data centers and whether people are going to want them near them.
Yeah, well, I think it's well deserved because the industry, myself, and a number of people spent a lot of time educating people over time. But I think in the last couple of years, we've kind of forgot that we're in the communities to help be a bridge of opportunity for everyone. And the industry hasn't done a great job of telling this story. I mean, you know, one story, you talk about water. I made an initiative in 2018. I personally went to these meetings over the years and said, this is who I am, this is what I believe in. My wife has been my partner for 30 years of marriage and 20 years in business. And we went to those meetings and sat down with people and said, this is what we're gonna do, this is who we are, this is what we believe in. And I can tell you under my tenure, we never lost an opportunity to sit and bridge an opportunity, whether it was in Georgia, where we built one of the largest AI centers in the world with the community and the help of everyone, bringing people together. But we eliminated water in 2018. That wasn't because there was a big conversation about water in 2018. It was a conversation that I had with our team that said, hey guys, if I'm gonna go stand in front of these neighborhoods and talk about what we're gonna do, I have to have the trust of the community. And why do I want to take water resources away if we can eliminate it? So we eliminated and went to a closed loop system in 2018, long before the water conversation came up. So the industry's got to continue to be proactive, innovating, and be a bridge builder to people, bringing people together. And I think we could do a better job at that. And I'm certainly going to focus on that in Q2. And there's some places that just may not be the right place to go. So go someplace else. You don't want to sit there and fight with communities. You want to bring bridges together on how we bring people together. And when the opportunity, it doesn't work for that community, you should politely say, thank you for considering us. Thank you for bringing these votes up. And we'll move on and try to find a place that the communities can embrace the opportunities. And oh, by the way, the infratech and advanced manufacturing, try putting some AI infrastructure with advanced manufacturing and bring jobs to a community, and you'll have a different conversation, I think.
Chad, it's a longer conversation. We hope to continue it with you. Thank you so much this morning.
Thank you.
Okay.
Coming up, a new look at the state of the consumer ahead of CPI data. Stay tuned. Squawk Box will be right back.
some
Welcome back, everybody. U.S. consumer spending surging in April. It's the strongest pace, actually, in 3 years, according to Bank of America data that shows household card spending rose by 4.8% from last year. Joining us right now is Liz Everett-Chrisberg. She is the head of the Bank of America Institute. Liz, thanks for coming in today. I want to talk about these numbers, but let's talk about why we focus on these numbers. You will have almost 70 million accounts, consumer and small businesses, that you're watching on a daily basis, so you get constant updates about what's happening in real time.
Correct.
This is the strongest April you've seen in 3 years?
In 3 years, 4.8%.
Yeah.
But one of the things that I think people are going to think is it's only strong because of gas prices, right?
Yeah.
And if you strip out gas, you still saw spending grow by 4%, which was an acceleration over the 3.6% ex-gas in March and in February. So it wasn't just strength because higher prices at the pump. That being said, the resilience is uneven. It's being driven by higher income consumers, and we are starting to see preliminary signs of the lower and the middle income consumer getting squeezed.
What kind of signs?
So the easiest way I think to think about it is if you look at where spending is. So higher income consumers, their spending growth was around 5%. Lower income consumers, they went up 3.1, okay? Now compare that to how much money they have coming in, because we look at the wage data too. Higher income consumers, remember, they're spending 5, their wages were up 6%. That's the highest growth we've seen in years. But their wages are outpacing their spending. Now let's look at the lower income consumer. Their wages increased, but they went from 1 to 1.5%. So that's less than half of where their spending is. So they are getting squeezed because their wages aren't keeping up with what's going on.
Are they increasing their spending by taking it out of savings? Are they increasing their debt spending with a credit card?
So they're doing a couple of things. One, from a spending perspective, they're pulling back on discretionary. So we're not seeing that overall, but within the lower income consumer, they are pulling back on their discretionary spending. And they do have buffers to help kind of bridge this gap right now, and they've got them in a couple of different places. They've got deposits, they've got savings, right? They've got tax refunds, which we can really drill into, and then they also have, potentially credit. And when we look at credit overall in the aggregate, credit card utilization, it's kind of at the same level it's been since the kind of 2010s, since before the pandemic. But for the lower income consumer and for the consumer that's not paying off their bill every month, right, the revolver, you are seeing their credit utilization tick up. So that's one way that they're funding it. It's not at dangerous levels, but it is higher than the aggregate. The other thing to think about in terms of buffers is tax refunds. We're, just finished up April, so most people have gotten their tax refunds. What we have seen so far is only about 20% of the tax refunds went to spending. 50%, just about 50%, went to increased savings. So that is something that can help support this. And then about a quarter, a little over a quarter, was used to pay down debt. So we haven't, that buffer, that catalyst from tax refunds isn't totally gone, but it is something that is not going to infinite.
It's a 7-day data suggests softer spending. How much did it fall off a cliff at the end of the month?
So that's a great question. And you think about
Really?
it is a great question. Give you credit for that one. If you think about the aggregate, how the aggregate was great, but breaking it down is different. If you think about the daily spending, that tells a slightly different story than the full month. And what we saw was we did see spending come down the last week of the month. But I think that is not, it's too early to really be concerned about it because that's not atypical. It tends to go down at the at the end of every month, the last week. It went down
because as John Hope Bryan always says, I ran out of month before I ran out of money. I ran out of money before I ran out of month.
Yes, but again, this is very typical, and it went down a little bit more in April than it did in March, but it was the same amount that it went down in February, the same amount that it went down in January. So a little too early to say that the consumer has run out of money at the end of the month, but it's a pattern we see, but it's one we're going to continue to watch.
You said that credit card spending is not at dangerous levels. What is
utilization?
The level? Okay, credit card
Utilization. So it's not. People have not run out of they still have credit. They're not at their limit. They're not at their limit. So they still have some credit, but it's a little less than they had before.
Overall, if you just had to say, here's where we stand, the state of the consumer today.
I mean, overall, the consumer is still resilient. Overall, the labor market, we talk about jobs. Jobs are being created, wages are going up, but it's uneven in where it's falling out. So higher income consumer continuing to do really well, lower income consumer getting stretched.
Liz, thanks a lot.
Of course.
Nice to see you. Coming up, President Trump saying that the ceasefire with Iran is on, quote, massive life support. Retired Navy Admiral and former NATO Supreme Commander James Stavridis is going to join us with more on the options for U.S. forces and how to reopen the Strait of Hormuz. Squawk Box coming right back after this. Welcome back to Squawk Box. Our next guest is going to weigh in on the latest with the Iran war. Joining us right now is retired Navy Admiral and former NATO Supreme Allied Commander James Stavridis. He's a partner and vice chairman at the Carlyle Group. He's also the co-author of a new novel, which is out today, 2084, the third and final installment of a trilogy. We're all trying to understand what comes next. Is there an option for the United States, given that it does seem that the Iranians are willing to play this out for as long as they think it takes, and are willing to put their own people to some degree in peril and their own economy in peril? The question is, are we, I guess, at this point?
Andrew, I think the president has three options at this point. None of them are very good. One is he can throw up his hands and kind of walk away. That's unrealistic. I think you leave the strait in that hands of the Iranians, and they still have the nuclear. But he could still do that in frustration. Option two, he could resume massive bombing campaign, sort of similar to what the first 30 days looked like, more shock and awe, but go after leadership, go after oil and gas, a lot of downside to that, cost, retaliation, but that's option two, go big. And then option three, which is where I think this probably lands, is continue to try and strangle the Iranian economy, open the strait with force. I think that has to
What does that
occur.
mean? Walk us through the idea of opening the strait with force.
You'd need a carrier, you'd need a dozen guided missile destroyers and frigates, you'd need 6 minesweepers, You need special forces in small boats, helicopters, probably a squadron. I could take you in detail through it. We have these plans. It would be a significant undertaking and would probably require, here's the bad news,
Yep.
some troops ashore.
Okay, so you have some trips ashore. What is the economic and human toll of this?
It would be significant, but you would end up succeeding. You would open this strait.
And how long would you have to be there to keep this strait open in this regard?
In the scenario we're spooling out here, you'd have to be there for potentially years.
And what is the economic cost of doing that?
About $1 billion every week.
$1 billion every week.
Maybe more. Maybe.
So you'd be spending $52 billion. This goes now, we always talk about the cost of oil. It'd be $52 billion annually.
That'd be minimum. Don't forget our wars in Iran and Iraq were, our wars in Iraq and Afghanistan were measured in the 50 billion every quarter kind of level. So this is a very costly enterprise. So again, there's no great option here, but I think where they will.
But you're calling that the middle, the $50 billion a year option is the middle option.
Correct.
For you.
Correct.
What is the all the way option and the no option? the free option.
No option. The good news about the no option of just walking away from it is you reduce cost tactically, but strategically the strait would remain closed and the global economy would take a hit. And I leave it to economists to measure that. In terms of the really high end, putting troops ashore in a significant way, going downtown Tehran, you're talking 100 to 150 billion a year kind of cost. So I think you end up sort of in the middle. None of it, again, are a good set of options. What you want to do is put enough pressure on the Iranian economy that they come to the table in a serious way, which they haven't so far, and it's your point. It's because they don't care about their people.
That's extraordinary, just to even contemplate.
What is the shock and awe cost?
Shock and awe, if you really stretch that out and you include significant troops on the ground, that is a...
What you would be including significant troops on the ground?
That's your downtown Tehran plan?
Yeah.
And we have all these plans just sitting in binders somewhere?
They're in file cabinets.
You've looked at them, you've read them, you've written some of them.
I have been involved in this kind of planning. So has every retired four-star. It's a well-known sequence of events. Opening the strait, Tehran, all of it.
I guess at that point, with the third option, you look at what a peaceful, prosperous Middle East looks like
and
for the next decade, and wonder whether it's worth $52 billion.
That's exactly right. You decide whether you want to play the long game here.
Yeah.
Again, this is why your best option is to get the Iranians to the table. I think there's still an even chance of that occurring because we're very focused on Iran as capable of lasting forever. I don't think that's the case. I think the economics of this are going to start to grind away.
Even the regime could be compromised. They're not yet, probably.
Not at all.
Although they don't even have the supreme leader.
He's still alive. He's still alive.
Are
but
you sure?
No one is sure. But I think all indicators are that he's alive. We killed his parents. We killed his parents. We killed his wife. We killed his child. He's in no mood to negotiate, but he's alive. He is wounded badly, according to the Secretary of Defense. So, not a good interlocutor. Becky?
Let me ask you about what Bibi Netanyahu said on 60 Minutes on Sunday.
Sure.
Israel is the largest recipient of defense aid that America has, military aid and military assistance all the way back to World War II.
Correct.
Bibi Netanyahu said that $3.8 billion that they're receiving, they would like to wean themselves off between now and, I guess, the next 10 years. What does that tell you? Is that a sign that they are there on their own 2 feet? Is that a sign that they don't need us anymore? Is it a sign that they don't want to be beholden to the United States opinion on what they can and can't do?
All three. And at the end of the day, one significant result of this war is going to be Israel as a superpower in the region, in the Middle East. I'll give you a second major implication of
I mean, is
all
that
of
good for
this.
us or bad for us?
I think it's good for us ultimately. It'll reduce our cost in supporting them militarily. It gives us a strong, capable ally in the region. But I'll give you an investment implication to all this, which we're discussing, which is defense. It is the fact that the United States has proposed a huge new defense budget, $1.5 trillion. Europe is in the process of doubling their defense budget. Japan is doubling their defense budget. We're burning through capital stocks that are going to have to be replaced. Huge human cost, huge geopolitical turmoil. But as an investment, defense looks pretty promising.
And defense as an investment for the short term, because if you're looking longer term, we're not going to be there. The ones who are defending all of these different places, they will all be stronger allies and able to stand on their own 2 feet, and therefore our defense spending will eventually come down?
That would be the ideal scenario, but we also have opponents like China and Russia who are also increasing their defense spending. And by the way, as to the book that I just wrote, 2084, Looking to the Future of War, it's changing in front of us. It's unmanned, AI, hypersonic, special forces, all that comes together in this novel of 2084, but you don't have to wait to 2084 to see it unfolding.
I have a question about that. Did anything that's happened in the past year or two come faster than you thought in
Yes.
terms of changing? But would that change what you think the 2084 really looks like?
It came faster, but it doesn't change my conclusion, which is that 2084 is based on unmanned artificial intelligence, cyber. All those things are changing more rapidly than I thought they would. Look at Ukraine, and I'll close with just two numbers in Ukraine to hold in your mind. The Ukrainians are building 1 million drones a month, Andrew, and they're killing 1,000 Russians a day. Kind of do the math there. That's the future of warfare.
That's the future of warfare. So when you talk, by the way, about putting boots on the ground, for example, in Iran, do you think in the future you would never put boots on the ground?
I think you're going to put fewer and fewer humans on the ground. And by the way, here's another investment implication of all this. It's robotics. We're all liquored up, as we say in North Florida, about artificial intelligence, and we should be. But that ability to actually do things in the real world, that's robotics. Right. And that will be a significant part of war as well.
That sounds like Terminator without the machines running it. It's just other people running the machines and dominating each other.
That is correct. And that's going to be true not only in war, it's going to be true on the nursing homes. It's going to be true in outside in Times Square, vendors. Robotics is going to be a significant, and this upsurge will pick up all of this.
They want us to go just because we're over time, but I just have no. But the implications of this on the war piece.
Yeah.
If everything is robotic and everything is just drone oriented, doesn't it just become a battle that maybe doesn't even ever happen on the field at all? It just becomes a deterrent scenario where you know that one side has more than the other, and that's it.
I could make the argument that what you're describing is actually nuclear weapons.
Right.
And
Yeah,
so
no,
do
but
we get to that point? I think the answer is
whereas
yes.
if you know that we have, 50 million drones ready to go,
That's called deterrence.
Yeah.
Deterrence
Mutual
is
destruction.
Exactly, and it's two things. It's capability, capacity, if you will, and credibility. Does the other side believe you would use it?
Right.
Those are the two elements.
It's fascinating to talk about what's happening in real life, and it's fascinating to talk about fiction, though you've been thinking about what this all looks like in 2084. Congratulations on the book, and thank you for your help this morning.
Thank you.
All right, the countdown is on. SpaceX is now on the IPO launch pad with the value of Elon Musk's company expected to be close to $2 trillion. One of the earliest investors in SpaceX, Ron Barron, will join us for an exclusive interview when Squawk Box returns.
The Sohn Conference, May 12th in New York City. Be there in person to hear market-moving ideas from the biggest names in investing. This year's lineup includes Jim Chanos, David Einhorn, Mark Lazary, and Orlando Bravo, plus NVIDIA's chief software architect, Jonathan Ross, for his insight on what's next for the AI industry. All proceeds go to Memorial Sloan Kettering's Pediatric Cancer Fighting Program. The Sohn Conference is where Wall Street unites to fight childhood cancer. For tickets and more information, go to sohnconference.org.
And welcome back to Squawk Box. I'm Dominic Chu with a check on your morning movers. We're going to start with a massive move in shares of Wendy's right now, gaining roughly 23.5%. This is due in large part to a Financial Times report that Nelson Peltz's Trian Fund Management is in talks to raise funds for a Wendy's take private deal. Trian has a history with Wendy's, of course, dating back to 2005 in its activist campaign there, and it owns, alongside Peltz, roughly 16% of the company's stock. Peltz also considered that takeover bid back in 2022. Now, he said in an SEC filing back in February that Wendy's shares are undervalued. We have reached out to Wendy's and Trian both for comment. We'll let you know if we hear back from them. That stock is down roughly 30% over the last year. It was a $12 stock at this point last year. Shares of Swiss sneaker company On Holding down by just about 6.25%, despite an earnings beat and revenue beat as well. While direct-to-consumer sales fell short of forecasts, it raised its profitability outlook and reiterated its 2026 net sales growth guidance. The company said it caters to a more affluent customer who is better able to handle ongoing economic uncertainties. Its outlook continues to include a 20% tariff on imports from Vietnam, but the company has applied for a tariff refund. Those shares, again, down 6%. And AST Space Mobile shares are dropping just about 12% right now after it posted a first quarter loss that was wider than expected. Still, though, the company maintained its full-year guidance of between $150 and $200 million. It also reaffirmed its plans to launch 45 satellites by the end of the year. Those shares are already up about 170% over the course of the past year. So, Becky, AST Space Mobile, a stock on the move. I'll send things back over to you guys.
Okay, Dom, thank you very much. We have a lot of ground to cover with our next guest, beginning with Elon Musk's SpaceX, which is planning the largest stock debut in history. So let's get right to Ron Barron. He is an early investor in SpaceX. He is the founder, the CEO, and the portfolio manager of Barron Capital, which started out in 1982 with $10 million in assets under management. By 1992, it had grown to $100 million, and today it is around $50.9 billion in assets under management. And Ron, I want to thank you for being with us this morning.
To be exact, $55,898,000,000.
55 billion?
55,898,000,000.
Okay, when you were on with us in November of last year, it was 45 billion. What grew?
SpaceX grew. I guess, I don't know, but I mean, that's the big one. So that happens to be 15 billion out of our 55 or 56 billion dollars is SpaceX, and Tesla's our second biggest at 5 billion. So we made our clients $61 billion in profits, and ourselves, since 1992 when we had $100 million. 61 billion came from 100 million. And now I think that in the case of Tesla, which we've been investing in, met him in 2010 in an IPO. Took me 4 years to become convinced that he was going to be successful. I thought he was brilliant, kept talking to him, kept visiting him. 2014, go to visit him again. I said, man, I have to invest in this now. Now is the time. Stock triples from 25 to 75. I don't own a share. It doubles again. The pain is too great. and then we invest $400 million between 2014 and 16 and make about $8 billion so far in profit. And I think we can make 5 times that amount in 10 years. And then SpaceX, starting in 2017, because I have this relationship with him, it's very good. And I learn about SpaceX and I'm interested in it. And I say, I'd like to invest in that. And they do these tenders twice a year in SpaceX because every single employee is a shareholder in SpaceX. They say, Becky, you are this fantastic engineer. You're making $250,000 a year, but you're now worth $5 million. Don't you think it'd be a smart thing to sell some of that stock a little bit to put the money in the bank and protect your family? So they have these tenders twice a year for $1 billion a piece. And we've been one of the largest, if not the largest purchaser in each of these deals. And recently, and they get oversubscribed without any announcements and no bankers, been oversubscribed in one afternoon. And so we're treated just like one of the largest institutions in each one of these offerings.
Basically, you are paying the employees so that they can become more liquid and hold on to those things, and that's how you've gotten your ownership stake
Exactly.
in
So
this
now,
private company
yeah,
to this
so we've
point.
invested in,
Which, by the way, that's part of the reason that this company has been able to remain private for so long.
Yeah, right. And so we've invested about $1.7 billion since 2017, and that's now worth about $15 billion at current market prices. So of the 61 billion profits, 20 billions come from him.
You have been somebody who has been an apostle, kind of speaking about this for years. I can remember having a conversation with you probably back 2020, 2021. You tried to convince me to do it. We're not allowed to invest, and I had to tell you that, but you were saying SpaceX is where it's going to be. This is the investment you really should get into. Had to say no the whole way through. You're now looking at this company about to go public, and what do you think the opportunity is here? What do you think happens?
This is going to become the largest company on the planet. This is so when you go public, I don't know if it's going public at 1.5 trillion or 1.75 trillion or maybe a little bit more, but where it goes public, I think that the company over the next 10 or 15 years is going to be worth 10 trillion, 20 trillion, 30 trillion, and I could be very low. Could be very low on where it's going to be. So so today we can talk a little bit about infrastructure.
Why? Yeah, let's talk about why, because
So
I think
there's several,
like 70 billion of that would be what the public can actually buy into, I think.
70 billion is exactly right. In fact, right after the offering, then they've changed the rules so that 5 days after the IPO is completed, there will be one index in which it will be included. 10 days, there will be another index in which it's included. 15 days, there will be another index in which it's included.
You're talking about the NASDAQ index?
The President of New York Stock Exchange, when I was young, I drove an ice cream truck one summer, and maybe a summer and a half. And one of the things that was important to me was I had to get my Carnival Bar ice cream truck to the beach route before Mr. Softy got there. And so you have, so one of the guys in my office said, and the New York Stock Exchange president wanted to come over and talk to me for some advice. And a friend says, Pat Padalino is our chief operating officer, said, do you ever think when you're driving that ice cream truck that the president of the New York Stock Exchange is going to come talk to you for advice? Are you serious? And so I said, well, I was able to beat Mr. Softy to where he was going, and so
he came to ask you for advice about whether they should put that into the index early?
Well, she was telling me about the different indexes, but she was also hoping that they would list on the New York Stock Exchange, and they chose
They chose the NASDAQ.
I think they've chosen NASDAQ,
yeah.
which is where all the technology companies are. And she was saying that there are all these other things that she could offer.
But that was part of the auction process where the two exchanges were bidding it up, saying, hey, we can offer to get you into the index sooner?
I don't know. I think they've pretty much decided that as a leading technology company, they should be listed on NASDAQ, where all the other large technology companies have been listed. But there's a lot. So what enabled this company is him. So he comes up with the idea that you'll be able to launch a rocket and reuse it. And no one ever did that before, and no other rocket company was interested in doing that, because if they did, then what would happen is that there would not be a demand for as many rockets. So nobody wanted to do this. And they always said it was impossible. They said it was impossible because nobody tried. Mm-hmm. And when they did try, nobody's been able to accomplish it. So that's what enabled this. That's what enabled us to have Starlink. Mm-hmm. And Starlink, after you have that, and we have the Falcon 9, then that brings it up and comes back. Then we decided, hey, wait, there's a demand for in-space data centers, and instead of having data centers on our planet, where it's very, very difficult to get. The governor won in New Jersey because she said our electricity bills are too high. We're going to stop this data center construction, making our electricity bills go up. Her roommate, when she was in Congress, is a candidate for governor in Virginia. She won, same idea. So here you have people who are saying,
not in my backyard.
Yep, yeah. That's the deal.
And nobody wants it in their backyard, so send it
I would have thought they would like it because it would pay taxes, but the people don't like it because not enough jobs and because their electricity bills are going up.
And the water usage, too.
Water is short, and electricity is a problem.
And the water you need for cooling, which you don't need in space.
Right. You don't need this cooling in space, number one, as long as you have giant radiators. And then electricity, which is a huge cost, you don't need that either because you're using the sun. So basically, you're getting free electricity and free cooling once you get into space. And so now, because of the idea of going to space, we've now developed the Starship. And the Starship, once that works, is going to be 100 times its power. I guess it's 200 tons that they could bring to space. And now the Falcon 9 brings, I think, 17 or 18 tons to space. Mm-hmm. So huge unlock is coming from Starlink. It's coming from the
I want to talk more about this in a second, but you are somebody who has completely tied your fortunes to Elon Musk, and you have done very, very well by doing that. It's the reason that your firm has so much in assets under management at the moment. But you pointed out yourself that the ownership that you have right now, 27.2% of your funds are invested in SpaceX. The second largest position is Tesla with 8.4%. So that's more than 35% of your funds that are now in Elon Musk companies. If you're right, and if SpaceX takes off on the IPO, you could be talking about a much larger percentage. I remember a time when you sold Tesla shares, the only time you sold it, and the reason you gave is because you didn't want to be that leveraged to one company, to one person, to Elon Musk. Have you changed your mind completely on that?
No, I've never changed. I never wanted to sell any shares. It's just I was getting criticized everywhere. So we sold in 2022, at the end of the year, we sold about a quarter of our shares in Tesla for clients. Personally, I have never sold a share. And in fact, I made a deal with our directors of our mutual fund. I promised them I would no longer invest for myself. This is in 1992, somewhere. I said I would no longer invest for myself. And when I tried to get everyone else to invest in Tesla at Barron Capital, no one wanted to do it. And so I went to the board and I said, I'm not taking anyone's opportunity. If you let me do this, I can make this much money, which is going to make Barron Capital stronger and financially. And I'm not doing it for myself, I'm just doing it for because I own Barron Capital.
Right. 11.7% of the assets under management are the Barron family.
Right.
So you're invested right alongside with your clients.
Right. And so I said, and if you let me do this, I'm the last person to purchase it, and I'll be the last person to sell it. I will not sell a share until I sell all of my clients' stock across the board.
But do you regret having sold those shares, caving to pressure at the time to sell your investor shares?
Clients, all of a sudden, the stock was up 20 times.
Yeah.
And all of a sudden it became such a large investment for my clients. I said, and I started getting calls, and they were nervous. And so I said, okay, we'll sell a quarter of your stock. Personally, not a share. Well, with Barron Capital, not a thing. I have never sold a single share of Tesla, and never will.
So have the shareholders not? Are they no longer calling and asking for you not to be so exposed to Elon Musk? I
haven't heard that lately. Now it's Tesla's up 40 times.
Right.
So it was up 20 times, and so now it's up 40 times after 3 or 4 years when it has changed very little. Most people can't tolerate having an investment which doesn't change a lot in price over a long period of time because they're investing in themselves to do new things. Now is a great time for Tesla. If you read the transcript of the last earnings call and you look at the chart, they give you this table of a book, and they describe pictures, a picture book. So it's paragraphs on each page describing the factories and the opportunities they have. So Tesla, when you read about all the things that they're doing right now, now is the time for Tesla. And I think that Tesla, as I mentioned before, I think it's going to be 2,000 or 2,500 over the next 10 years. But that's one. But SpaceX is the one. When we're talking about how they're going to do on the IPO, who knows? But the idea that we have, is that this 1.5 or 1 3/4 or a little bit more IPO,
$1 trillion IPO.
Yeah, is I think it's going to be, as I said, 10, 20, 30 times that amount. And you should try to figure out for your families how you can get to own some SpaceX. It will be the largest company on the planet.
Do you expect, and there's a lot of people who think a year or two from now, after this happens, that SpaceX will ultimately buy Tesla and will all be one company? Is that in the cards for you?
So I think there's pluses and minuses. And one of the directors said to me, Ron, if you're asked that question, I'm sure a lot of people will ask you that question because they think you know and you don't know anything. And I really don't know anything. Just say you don't know. So I don't know.
No, I recognize you don't know. I'm curious whether you think that would be a good thing ultimately, and whether you're betting on that, meaning like that's something in your mind that you're betting on the future of all these companies. Do you think that happens?
I'm not betting on that. Because they're able to accomplish a lot the way they are structured right now, and I don't. There's, as I said, pluses and minuses. I don't want to discuss them now, but I mean, I think there's good reasons why you should do it and good reasons why you shouldn't do it. And whatever he decides is the best thing to do, you know, when you're worth trillions of dollars ultimately for him, he's not doing this to make as much money as he can. He's doing this because he has some feeling about the planet. And so basically maybe it makes it easier to operate, which is true, I'm sure. But then you get a different valuation on the company, which is also true. So I don't know what he's going to do. But whatever he does, I'm sure there will be good rationale for it. And whatever he does, it's very unlikely that that I would say it's not a good idea. How do I know? He's the only one. I'm not trying to run a company. He's running the company. You know, it's really hard as an analyst when you're following a company like this that changes so much and grows so fast. I've never invested in anything like this before. My entire life, I've never invested in anything like this before. I was talking with one of the guys at Goldman, and we were talking about valuations. He says, Ron, did you ever know about the East India's trading company? I said, yeah, a little bit. And he says, 1604. What happened is that they had the ability to go from Europe to Asia, trade spices and fabrics, and they had exclusivity for 22 years. And they went out and they raised the money from the people in Holland, and they raised it with inventing the limited liability corporation. So all you could lose was what you put up, not anything. You wouldn't lose your house and your job and your family. That's all you could lose. And then they had a trading operation. So they raised the money, and for 22 years, they had exclusive ability to get to Asia from Europe, and they became the largest, most powerful company on the planet. This is what we got with SpaceX. They're getting you to space, and the things they're doing in space are different than anything that anyone can do on this planet. And this is going to be a huge space economy. So there's a lot of plays that people can have. I don't need other plays, but you can have a lot of plays that people will benefit from the work that he's doing and that he's accomplished. This is an unbelievable person.
Has your investor base changed over time? Do you have people who are so eager to get in on SpaceX that they have been drawn to Barron funds over the last
We're
few
getting
years?
a lot of flows right now because of that. And what I try to tell people is that, it's really nice that the stock is going to be priced higher but the thing you should be investing in is not because you're going to make that, but rather the big gain is when I'm buying. So at the IPO price, I've got an order for $1 billion that I want to buy more stock at the IPO. I don't know if we're going to get filled, but I'm going to try. And I think, and I'm not buying it because I'm buying it at the IPO price, and I'm not buying it now because I think that it needs to be better in the short term. I'm doing it because I believe deeply that this company is a major game changer. We're talking about infrastructure. So Starlink, they are going to be the internet for the entire planet. The internet for the entire planet. Nobody can do this except for them. So they're going from...
I had it on United. It got in immediately.
Amazing, right?
It was amazing.
Yeah. Delta didn't do it because they wanted to have an interface where when you got on the plane, you would see a Delta image and you pay the bill to Delta. And he didn't want that. He said, you want it? We'll be delighted to put it on, and they're doing it. NetJets. NetJets says that I'm responsible, and one of the people is responsible for them to be able to get the internet on NetJets, and they're now doing 50 planes a month, 600 this year, and I haven't seen it on my plane yet, whatever planes I use, but they're going to get 600 a year. I think the flight NetJets might have 1,500 planes, 1,200 planes, but they're getting it on it. Right. And once you fly on that and you have that, and you don't have the ability to use the phone when you're flying around ordinarily, and all of a sudden you get it there.
I think it's going to be a game changer for that. By the way, it's going to be a game changer for United.
Yeah.
Yes.
I think actually United is going to have, for a period of time, because Delta's not going to have it for a period of time. There's going to be a period where if you want to have Starlink, which is a game changer,
You know what it used to take.
business folks are going to get on those planes.
You had to do backflips.
Even
to
last
finally
week,
get
I had
it.
or 2
Yeah.
weeks ago, I had a United flight that I couldn't get the Wi-Fi.
It said, you want Starlink? Yep. Done.
Done.
But you have to believe it's more than Starlink.
Yes. So Starlink alone, I think, can be worth 14, 15 trillion dollars. Starlink alone.
As a global player,
In 10 years.
assuming that these satellites are literally covering the entire globe.
So they have 10,000 satellites now. They're on the way to 20,000. They have 9 million customers last year. They have 15 million this year. they're going to grow 50% a year. They could have 300 million customers in 10 years. Then they got enterprise, then they got the government, and there's 8 billion people on the planet. 3 billion don't have the internet, and a lot
Is
of the
that,
5 billion.
by the way, are you assuming that Kuiper, which of course is the Amazon version of this,
You would never bet against Jeff Bezos, but he's going to have a niche. You can't compete with a guy who has all those satellites up there already and all those customers and already serving, and he's going to be like a virtual network. And sooner or later, one of these big telcos is going to sell them access to the city. So he's now got the, he bought Spectrum, so there's a lot of services that he can.
you think he's going to actually be providing like ground level cellular service as well, and as an integrated product?
If you have more than 50% of the people doing business with you on the internet, you are the internet. And so he's going to have, I think the opportunity is somewhere around $1 trillion of annual revenues for him, and then maybe making 70–80% profit margin, 10 years, 12 years, and that could be worth $14–15 trillion alone, just Starlink.
Is there ever a chance that the government, I mean, you just said he is the internet. If you're more than 50%, is that ever a chance that it would bring the government in to look at it as monopolistic behavior?
Of course. I mean, you know, we live in a very litigious society.
Yeah.
And people are jealous or upset by, but his goal is always making things better, faster, cheaper.
Right.
Better, faster, cheaper. Whether it's how many railings you put on platforms that are used in the factories to prevent people from falling off. He looks at purchase orders when he goes to visit factories. Looks at purchase orders. Show me the purchase orders. And here there's 2 railings. What do we need a second railing for? And then why do we need these railings on the low platforms instead of only on the high platforms? Nobody's going to hurt if you fall off a low platform. So basically,
attention to
the
detail.
culture.
Yeah.
The culture is low cost. As quickly as you can, get the cost as low as you can, because everything gets commoditized sooner or later. Competitive advantage now, and you got to. His advantage is he innovates faster than anyone else. So the culture, innovate fast and perform and do things better than other people.
Okay, so 2 questions. First of all, is Elon Musk the most important person you've ever met in your life?
Yes. Yeah. Unusual, for sure, and brilliant for sure, and got a heart for sure. I really like him. And you know, people, when you asked me before about tying my business so closely to him, is that to hear my whole life has been, you know, since 1970, I come to New York in 1982, and I'm living in a basement in 1982 and doing chores for my friend's wife. And then 1982, start Brown Capital. I'm an analyst in the 1970s. And then 1982, you know, not very much, and then a bunch, and now it's going to be, I think, big. And so all these years, build this business, and then I push all the chips to the center of the table, and people say, "Really? Is that what you're going to do?"
It's your all-in moment.
All in, and so I think so. I sort of think analogizing to, I'm not like J.P. Morgan, but he's the guy who financed Rockefeller, and I certainly am not financing Elon Musk, but I'm part of it, and to be tied to the most successful man on the planet, I think it's a good thing. Clearly risky, but that's my game, and I think by next 10 years or so. So
risky from the fact that it's a key man.
One person.
Yeah, it's one person.
But there's 130,000 people there, 150,000, 140,000. You get the best people, and people apply for jobs. I think they hire 30,000 people a year, and they have 4 million applicants, 3 million, 5 million applicants. Everybody wants to work there for one of his companies. They want to be able to go into meetings with him, and he walks away and he says, "You can do this." And he said, "We can reuse rockets." Really? You can reuse rockets? Yeah, not only that, what we're going to do is we're going to land them on a boat, offshore initially. You know, landed on a boat, really? And so he'll walk out of the room and Gwen will say, if he says you can do it, you can do it. And then when they look at how much things cost, he knows how much everything costs. And if he's not being charged the right amount, and if they're making too much of a profit, then he's gonna do it himself. They get terafab. So he needs to have 50 times the number of chips, the number of compute that's available right now. 50 times. So he goes to TSMC and he goes to Samsung and he gets the pricing, and nobody's going to be, they got great businesses, so why are they going to take a big risk building a factory they don't know that he's got this huge demand for? So they say, well, I don't know, we can give you the, he can't get enough chips. So he's going to build a factory called Terafab, and he has this whole idea about what he can do. So the chips that we're buying from NVIDIA, he'll never stop buying them, but the chips he buys from NVIDIA, he uses 3% of what NVIDIA provides, 3%. So he says, gee, and they make an 80% profit margin. So gee, I can do that, and I'm a good manufacturer, and what I can do is I have ideas on how we can make them faster, cheaper, simpler, and I can do that. And when he does that, he's going to build this facility. He's going to make the chips at a fraction of what's going to cost to make 50 times as many as the whole world is producing.
Yeah, obviously, you are a believer, and
Right.
it has done very well for you and your shareholders. Ron, I want to thank you very much for joining us this morning. One quick question before you go. You said it looks like he's leaning towards the NASDAQ for the IPO for SpaceX. Is that based on what you know, or is that just based on what you've read?
It's based on what Lynn Martin told me.
Lynn
She's
Martin
the head.
from
She's the head of New York Stock Exchange.
Right.
So I don't know. And you know, I was disadvantaged coming to talk to you now because I told you before that I wanted to wait until the S1 so I could read it.
Right.
So the information. So I have an advantage over other people trying to invest in SpaceX now because I've been investing in it for 9 years. So basically, I have knowledge. I don't need to get the knowledge that's that is available right now. This in a quiet period, I've already got the knowledge.
Right.
And
Being
so-
an investor for so long.
Right, and so I know what I have this idea about what it's going to become. So it's Starlink, it's Starship, it's Compute AI, it's you didn't even Terraform, and it's Grok. So can I get 2 more minutes on Grok?
Probably not two. How about 40 seconds?
Grok is like Anthropic. And so Anthropic invested in compute, and they've done amazing. They've grown from $9 billion of annualized revenues to $40 billion in 4 or 5 months. $9 billion to $45 billion. The opportunity is something like 27 trillion a year, and they're at 45 billion. And Grok is the same thing. Grok, what Elon thought, is what we need is compute. That's the limiting factor, compute. So he invested in compute. The other guys all invested in software. Now they just announced a deal yesterday or the day before, where Anthropic is going to use the compute that we've built in Memphis. We build it cheaper, faster, and better than anyone else. Super fast. That's us. Oh, and by the way, so the idea about betting against someone, you never bet against the guy with superpowers who would never give up. That's him.
Right. Ron Barron, thank
Thank you.
you very much for being with us today. We appreciate it.
Thanks for having me.
Folks, it's just after 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and among our top stories this morning, eBay officially rejecting Ryan Cohen's buyout offer, calling it not credible and not attractive. Federal Reserve nominee Kevin Warsh clearing a key Senate hurdle this week, advancing toward becoming the next Fed chair. Senators John Fetterman and Chris Coons both joined Republicans in a procedural yes vote. Final confirmation is expected as soon as tomorrow. And President Trump says that he wants to temporarily reduce or suspend the gas tax, but Congress would have to approve it. AAA says that the national average is now $4.50 a gallon.
Check out the futures. I saw the NASDAQ taking it on the chin more in the percentage terms than the others. But let's get to Mike Santoli. He'll have some analysis and fill in the blanks. New York Stock Exchange. He's looking at whether tech stocks are following the same path what we saw in the late 90s. We talked about that earlier in the show, Mike.
Yeah, Joe, I mean, I'm really just kind of wading into this already pretty active debate out there. And it's kind of funny because the bulls will say, hey, this looks like the early part of 1999. Buy tech stocks. Bears say, hey, it looks like early 99. Sell tech stocks because, of course, things were so dramatic in that short period of time toward the end. I think we're short of that in a general way. Take a look, first of all, though, at the 6-month chart of the S&P 500. Obviously, a very strong and decisive breakout from those lows March 30th to a new high. But if you look at the 6-month return at a little more than 8%, it doesn't show you the type of huge acceleration, vertical movement, and outright index-wide momentum that we saw toward the end of the 90s. It's also even true for the NASDAQ. Take a look at the 3-year of the NASDAQ. Now, it's more than doubled in 3 years, right? That's a little bit after ChatGPT was launched just 3 years ago. But in the 18 months from late 1998 till the ultimate peak in March of 2000, the NASDAQ more than tripled. So more than tripled in 18 months. Here we've got 100% in about 3 years. Obviously, this is a more mature index than the NASDAQ of 1999, which was a lot more speculative and highly valued and didn't have as many of these bellwether companies. One element of is the tech dominance. So the semiconductor sector is more overbought than it's been relative to its own trend at any time except in 2000 and 1995. In 1995, semis were cut in half over several months. The rest of the market did fine. In 2000, it was a generational market peak. Here is an interesting one. This is equal weight tech and equal weight consumer discretionary, kind of plodding along together for months, and then massive, huge upside vertical move in tech. And this was very pronounced yesterday. Anything that's touching the consumer that has to be aware of what incomes are doing and what oil is doing has been suffering. It also looks like a lot of capitulation by hedge funds in anything non-AI into AI today. This morning, you're seeing some selling in some of the semis. So we'll see if there's a little bit of a flutter. But I think you can basically have an overbought market that looks like it might need a rest without it being some kind of an ultimate bubble peak, guys.
All right. Very good. Thank you, Mike. See you soon.
Coming up, we are counting down to the release of the April Consumer Price Index. It's at 8:30 a.m. Eastern Time. Squawk Box going right back after this. Welcome back to Squawk Box. Media entrepreneur Byron Allen taking over as the CEO of digital publisher BuzzFeed. Allen will buy a 52% stake in BuzzFeed for $120 million. It amounts to $40 million, but 40 million BuzzFeed shares at $3 each. When the deal closes, now Allen will assume control of the company, and the company's current CEO, Jonah Peretti, will move on to a newly created role of president of BuzzFeed AI. Shares of BuzzFeed have fallen more than 98% since the company went public in a blank check merger back in 2021. And do read the fine print even on this deal, because it's complicated, even more complicated than perhaps I've explained it to be. When we come back, President Trump will meet with President Xi Jinping this week. One of the topics likely to be discussed, China's auto investments in the U.S. Senator Lisa Slotnick is going to be pushing for a ban on Chinese cars in America. She joins us next. And later, the April CPI data. The consensus is 3.7% year over year on prediction market Kalshi. 48% say it'll be above that number. That has been steadily increasing throughout the morning. The real number coming up right after this.
President Trump set to meet with President Xi Jinping this week. Joining us now, Michigan Democratic Senator Senator Lisa Slotkin. She's co-sponsor of the Connected Vehicle Security Act, and it's great to have you on, Senator. Maybe you've been on before. I don't recall, but thank you for joining us this morning. It's good to see you. Not everyone, I think, understands your concerns here. This is not really about thwarting Chinese competition in the automobile market. You're from Michigan, obviously. This truly is about personal data not falling into the hands of the CCP.
Yeah, well, it's both. I mean, it's an economic security issue, of course, but it also is a national security issue. I'm a former CIA officer and Pentagon official, And, if you imagine these vehicles coming over with what we know are great collection capabilities, 3D mapping, full motion video, geolocation of the driver, the ability to be hacked through a Bluetooth device and remotely piloted from Beijing. So separate from the fact that they, purposely lower the price, subsidize the price, and try and undercut industries like the auto industry in the United States, it's also just a giant, surveillance vehicle on wheels sending all that data back to China. And I have a problem with that. So myself and Senator Bernie Moreno, Republican from Ohio, put together this bill ahead of the summit so that when the president and his advisors go in, they're not so desperate to make a deal that they give away the farm and really kind of end the auto industry and let in this national security threat.
What if the cars were manufactured here?
Yeah, there's a lot of discussion about this right now. I think we left open in the bill the potential for some limited joint ventures, as long as the Chinese are like 15% of the joint venture. I think where it gets really confusing and problematic is like if they're building these things in the United States, but the data on our military bases, our infrastructure sites, again, that personal data is being sent back to Beijing, I still have a problem with it. And while American cars collect just as much data, right, we have very modern cars as well, the American companies are allied companies, so think about the Japanese, the Koreans, who we've worked with for years, they're subject to American law, and we haven't seen the Chinese be subject to American law when they take that data and use it for negative purposes.
Well, you made the point that it's not just about security, that obviously it is about competition as well. And they do have cheaper EVs. There is, Democrats talk about affordability every day.
Yep.
You're keeping cheaper cars, or this would keep cheaper, probably pretty good quality cars. If it's anything like what we've seen in Japan and Korea, they make great cars at this point in the Far East.
Yeah, and a lot of Americans have seen them in places like Europe, as the Uber car that comes to get you. I think people just need to understand, and you all know this, that the Chinese have a strategy when it comes to certain types of technology. They steal the IP, the intellectual property, they reverse engineer it, they build it at scale, and then they heavily subsidize it so that it undercuts every other car on the market. They do this with drones too, by the way. They come into a market and they absolutely demolish all the other producers. This is going on in Germany right now. Ask the Volkswagen folks. And it's the death knell for that industry. Then they have, the stranglehold over that market. Then they can jack up the price, push everyone out. So I just think we need to be aware. We literally see them do this with drones to the point where we don't have real American producers of big drones at scale because the strategy has worked for them. So obviously, as Michigan Senator, I'm not going to go down without a fight on that. And I think for both the economic and national security reasons, this shouldn't be a giveaway at the summit this week.
Can we just switch to AI quickly?
Sure.
You've been involved with some possible legislation there as well. What do we need? How do we need to approach this in your view?
Yeah, well, actually, I hope that the president goes into the summit this week and has, kind of the beginnings of a conversation a la arms control on the issue of artificial intelligence. We know it's here, we know it's new, we know it's supercharging things like cyber attacks, and we know that it's going to be used more and more in our military. The bill that I put together just said, hey, let's decide as a country, as a sort of family of nations, that there should always be a human being on the loop when you're making decisions of life and death. We should always have nuclear weapons. If we're going to ever, God forbid, deploy a nuclear weapon, we should have a human being making that decision, not leaving it up to machines. And that's the way it's going with this kind of classified AI race that's going on between us and China right now. So I put down a marker on the national security space, but look, we're seeing AI in the medical profession or in the Veterans Affairs administrations. I don't want a veteran being denied benefits because a machine looked at the paperwork and made the decision without a human being overseeing that. So those are the kinds of conversations that I wish we were having in the summit. I hope we're having in the summit, or at least starting.
How would you advise the Trump administration to go forward with what's happening in Iran at this point?
Yeah, there's so much to be talking about with the Chinese. They're obviously a competitor in the military space. They are an adversary. And we'd have plenty to talk about, but at this point, we're going in a little bit on our heels because the Strait of Hormuz, the Persian Gulf, isn't open. And now, I'm hearing a lot of things around Washington that the president is going to have to ask the Chinese for their help resolving what's going on with Iran. That doesn't put us in a strong position. That means we need something from them, and they're going to extract more things from us. So I think obviously the Chinese are hurting as well. The whole world is hurting. The whole global economy is hurting because the Strait of Hormuz is closed. And I think it's just unfortunate that on the board, the things we need to negotiate with the Chinese, we're now creating a dependency on them that otherwise wouldn't be there if it weren't for the war in Iran.
Did any part of you think, after 47 years, and as you said, you're very familiar with what happened with Iraq, and that, I could see how you'd be swayed one way because of your experience, but then in another way with the potential of an Arab Spring, whatever you want to call it, a new Middle East that includes Israel and includes, even includes a free Iran someday.
Yeah.
Is there anything in your mind that says that this might have been a worthy pursuit?
So look, as someone who served 3 tours in Iraq alongside the military, I have no love lost for the Iranian government. They have been a bad actor my entire life, and in places like Iraq, they killed friends of mine through their Iranian-backed militias. So I've seen their terrorism, I've seen the nuclear threat that they constantly kind of put out there, their ballistic missile threat. That's real. But I also, because of my time in Iraq, know that it's easier to get into a war than it is to get out. And I think, there's a reason. I'm a Middle East specialist, and you learn in Middle East 101 that the Iranians have strategic geography. They've got a very narrow Strait of Hormuz, and they've got mountains pointing down at it, and islands that give them opportunities to hold a superpower like us at risk, and we're seeing that play out. So it's not that I have any love for these guys, and it's not that they haven't killed their own people who are just trying to have some modicum of freedom, but we do have an obligation, as someone who's been at the Pentagon, to explain to the American people how the juice is worth the squeeze, particularly when they're feeling this in their pocketbooks every single day. So it's a hard distinction to make. Of course, I would love to see a different government in Iran, but I also don't think that the United States and the average taxpayer should be paying like this for potentially the next year for something that just didn't have the right amount of planning.
All right, Senator, appreciate your time this morning. Thank you.
Thank you.
Okay, we'll see.
Still to come this morning, Amazon's new delivery service asking customers, how fast do you want it? We've got the details after the break. And then the latest read on inflation. April CPI data will be released. That's coming up in just over 7 minutes. We've got the numbers and the market reaction straight ahead. We'll be right back.
Squawk Box. Amazon speeding up deliveries in a major way, rolling out Amazon Now, the new service promising packages in 30 minutes or less across dozens of U.S. cities. That includes Austin, Denver, Minneapolis, Phoenix, and plans to reach tens of millions of customers by year's end. That move ramping up pressure on fast delivery rivals like Instacart, DoorDash, and Uber Eats as Amazon pushes same-day shipping to the next level. That's going to be an interesting battle about what happens to everybody else, because I imagine they can do even more than the DoorDashes and Ubers and the like. So we'll see.
Up next, a read, wait, more than a read on inflation. We're going to CPI data. Futures ahead of that data. You can see the Dow's down about 50, NASDAQ almost 300. We will be right back with the numbers and the market.
We're just a few seconds away from the April CPI data. We'll get a look at inflation in just a moment, how it's showing up for consumers. It looks like the Dow is off by about 40 points. S&P futures down by 30. The NASDAQ is down by close to 290 points, but you did have the NASDAQ and the S&P at new highs once again yesterday. We'll be watching this very closely as we've been watching energy prices climb too, which may be part of the reason that we're seeing some pressure on stocks. Technology obviously being under more pressure here, but we are going to get those CPI numbers, and Rick Santelli is standing by at the CME in Chicago. Rick.
Yes, our April Consumer Price Index hitting the wires up 0.6 is the headline number. That's exactly what we were expecting. It follows up 0.9. Up to this point, still unrevised. That up 0.9 was the warmest inflation on a month-over-month headline basis since June of 22. Now the 0.6 backtracks it a bit, brings us to Feb when it was up 0.3. If we strip out the all-important food and energy, a little warmer than expected, up 0.4, double the rear view mirror, and that would equal where we were in Jan of 25. To find a hotter number, you're going to April of 23. Now, if we look at a year-over-year perspective, 3.8% a little warmer than expected, 0.5% hotter than the 3.3 in the rearview mirror. 3.8 would be the warmest since May of 23 when it was 4%. Now let's take a year-over-year core up 2.8. Once again, a little hotter than expected, 0.2 warmer than the rearview mirror. 2.8 will be the warmest since September of 25 when it was 3.0, which is where we were comping to last month when we had the 2.6. Finally, and I always like to bring up the 100-year plus index that we calculate CPI from, and once again, 333.02, guess what? Another new all-time high. We pretty much make them every month. So anyone who looks at the affordability issue, it's the compounding nature, and that really started in 2020. And if we look at core CPI, the actual index from the 50s, 335 and change, once again, a new all-time high. We see interest rates are moving up, hovering at 4.44 and a 10. The reason that's important, Becky, is that basically equals the high yield close of the year. We start to close above that level, all of a sudden you're looking at July of last year. And we want to pay particularly close attention to these levels because the longer the conflict goes on and all the questions as to how much of the inflation pressures in energy actually stay within the economy, well, that's an open question, but the answer gets a little more pessimistic in the marketplace. So these are lofty yields, and they're going to potentially hit an air pocket if we start to trade much higher. And I want to point out, we'll have a litmus test for the 10-year today, with 42 billion of them being auctioned at 1 Eastern. Back to you.
All right, Rick, thank you. I think the number that we want to pay a lot of attention to is the core CPI year over year. You said that was what, 2.8% versus the 2.7%. We spoke with Mohammed Al-Arian yesterday. He said that was the number to really watch if those higher energy costs are working their way into the economy and sticking there. What do you think of that reading? How do you read it?
Well, I look at it in two ways. I agree with Mohammed. It is something to pay attention to. It's definitely on the warm side. It's well above the 2% Fed target. But another way to look at it, considering all the open-ended issues that we left even before the conflict started with that last mile of sticky inflation, I am somewhat impressed that it's actually not a bit higher.
Okay.
Is that because wages are still hard to go up? That's what everyone's talking about. We don't have a wage price spiral, maybe, Rick, but 2.8 is definitely 40% higher than 2, isn't it?
Yeah, I know. There's no way around it, and obviously they remain sticky. They continue to crawl up a bit. And I continue to point to the indices, Joe, because we could massage these numbers any way you want, but ultimately what they're benchmarked against and how we look at it month over month, it just keeps climbing. It's a matter of how much. Until we get negative signs, the average person out there is not going to feel any more comfortable with some of the inflation they pay, whether it's from the grocery stores or all the way to bigger ticket items.
Rick, thank you. Let's bring in Steve Leisman. Steve, what do you think?
I think you're right, Becky, to concentrate on that core number if you want to know what the Fed's probably looking at. It's that 0.1 that was a little bit over expectations, 2.8, and the central question as to whether or not what we're seeing on the energy side on the top line is coming into the core. Let me give you some of the stuff from the top line. Gas up 5.4, energy overall up 3.8. A big jump in month-to-month electricity up 2.1%. That could be that whole data center story playing out in the CPI. Now, interestingly, commodities less food and energy, well, we'll call that goods, 0, a goose egg. What's interesting about that is some of the tariffs look like they're falling off because of what happened with the Supreme Court's IEEPA ruling and the administration's not putting them all in place. 0% on goods means that, and we could even get some disinflation on the goods side. I was talking to Jacobina from Piper Sandler, and he's noting that there's been $100 billion at an annual rate decline in tariff revenue. So that's something to watch, something coming off. Now, we need to talk about owner's equivalent rent up 0.5%. That's your shelter. What happened is because of the shutdown, we lost a lot of data out there, and now that data is being put back in. So it's a one-time lift to the shelter component. We think it's a one-time lift to the shelter component, and it should begin in the future coming off. Bottom line is a little bit of pressure on the services side. Airlines up 2.8. That's how energy prices come into the core. The services overall up 0.5%. That's where like guys like Austin Goolsbee have had some concern that it's not just on the headline. So watch that services number, and then real earnings down 0.2%. You take the earnings number, you subtract inflation, you come up with real earnings, and that's a little bit better than the minus 0.9%. So consumers are going to feel it in their pocketbooks, in their disposable income when you take away inflation. Becky.
Okay, Steve, thank you very much. Let's talk to a few more people about these numbers. Joining us right now is Stephanie Link. She is Chief Investment Strategist and Portfolio Manager at Hightower. She's also a CNBC contributor. Tiffany Wilding is PIMCO's economist. And Steph, let's just talk immediately what you do with this number when you see it. Are there areas or stocks that you get a little concerned about when you see the higher inflation, or are there other places you see opportunity?
Well, it's been a pretty narrow market, Becky. Since the war, it's really been led by technology, some Mag 7s, energy infrastructure, industrials, and that kind of thing, and hardware, and that's about it. And I do think that you want to have exposure to these areas. I do have exposure, especially on the industrial infrastructure piece. We've been talking about the data center build out and the companies that are building the data centers for a couple of years now, and I still think that that is an area where you want to have a focus. But I do think there's other parts of the markets that are getting cheaper. I mean, discretionary has just been thrown out. As yesterday was an abysmal day. I do think that there's some opportunity, something like a Starbucks, a Pepsi, even something like a Target, because I think that these companies are doing the best that they can, and I think the consumer is still consuming. They may be slowing down a little bit because of inflation, but you have jobs, the labor market remains strong, and wage growth is running at about 3 to 4%, so they are consuming, and that's encouraging.
Yeah, Tiffany, the numbers that we saw from the Bank of America Institute earlier this morning showed that, based on their 70 million accounts that they're watching with consumers and small businesses, consumer had their strongest spend for the month of April that they'd seen in 3 years. When you strip out gasoline prices, it was still up 4%, which is really significant, better than they had seen the month before. What do you think about how the consumer is sitting here as energy prices climb?
Well, I mean, I think you have to also pay attention to, the tax data that we've gotten. We got really incredibly big refunds this year from the One Big Beautiful Bill Act. So really what you're seeing with consumers right now is this kind of push and pull. So on the one hand, they're having to deal with higher energy prices, but on the other hand, they had lower tax payments that were due April 15th or bigger refunds. And so that's cushioning them for now. But I think the thing that we're worried about in others is that as you have, that tax-related stimulus that wears off this summer, that's when we see a bit more of the weakness on the consumer side as a result of higher energy prices.
Meaning that you think it was a wash, or in terms of the
I just think that
taxes versus higher energy, and it's fine unless it continues for another several months or another several weeks?
Yeah, exactly. So consumers did have a bit more cash, going into this as a result of the One Big Beautiful Bill Act. They had much bigger tax refund payments, and that was very helpful in the sense that it was able to allow them to support spending in other discretionary categories, even though gas prices have been elevated, trending towards 5% on a national average basis. But if these gas prices continue, as Steve Leisman suggested, it will be a hit to real incomes. It just means less money to spend in other areas. And so those other areas of discretionary spending going into the summer travel season, lodging, the airfares, maybe driving less, things like that, that will start to weaken, and we think we will start to see it there.
Hey, Steph, I've got a random question for you. You talked about how you are exposed to the data center infrastructure build-out. We had a conversation with Ron Barron earlier this morning. Data center build-out is certainly where it's at for the last couple of years. That has performed very, very well. There's a ton of money and a ton of investments that have gone into it. He's looking at SpaceX, which is his largest holding, and part of what he's excited about is the idea of building these data centers in space. if that were to happen, and by the way, SpaceX is looking like it'll be a strong IPO in part because of that. So you've got investors betting on the long term there, betting on the immediate right now and the near term here with the data centers. Would the data center infrastructure winners be different if these things were being built in space? And do you have a plan for that? Like, how do you factor that out as someone who is investing in this data center infrastructure bill?
I mean, and it's a great question. I think both are going to coexist. I think it's going to take a really long time for SpaceX to all of a sudden be the dominant data center play in space, but it certainly is. It's going to come. In the meantime, you have all these other companies that are starting to see massive backlog numbers, and that's the thing that I pay the most attention to. So if you look at Vertiv, GE Vernova, Quanta Services, Rockwell Automation, on average, their backlogs were up 34%. And I care about backlogs because that's dollars in hand. Orders can get canceled anytime. So I think you still want to have exposure, especially on the data center grid and also power, the whole gamut.
How big of a problem is the NIMBY issue, not in my backyard, and more and more places not wanting these data centers near them?
Oh, we're seeing it, and we're hearing about it, and I think you're just going to continue to have those states that are accepting it get more and more of these build-outs, these data centers. And so, yeah, I mean, you're always going to have pressure. I mean, I actually think, though, that, like, let's just take power, for example. I mean, I think natural gas is going to be the leading power producer and provider. We don't have enough pipelines, though, and that's also a problem from the regulatory point of view. So I think it kind of extends the cycle, if you will. It's not going to be this massive build-out all at once. It's going to take time, and it's going to be a state-by-state issue.
Tiffany, let's talk a little bit about inflation again. The PPI numbers are going to be important, where it shows what producers are dealing with in terms of inflation. What's your expectation for that? And is there a level where you worry?
Yeah, well, really, we want to see how this energy price shock is working its way through the supply chain. And it's important to keep in mind that the Gulf disruptions are really impacting Asian countries, more so than elsewhere around the world. Of course, Southeast Asia, China, et cetera, is where we really have the concentration of global manufacturing. So that we're very focused on those supply chains. Chinese PPI that came out earlier this week basically suggested that we're already seeing those increasing costs back in the supply chain. And that will filter through, eventually into U.S. import costs and, of course, U.S. consumer costs potentially. The other thing that we're also very focused on related to the AI infrastructure build-out is just the skyrocketing costs of various components that are needed in that, memory, chips, servers, and things like that. And that's also spilling over into consumer goods right now as well. And we're seeing it in computers and gaming and things like that. It's not as huge of a deal for CPI, but the relative weight is actually bigger in the Fed's preferred measure. So all of this is sort of creating some inflationary pressures, that is, certainly inconvenient for the Fed and likely to, just solidify their holding stance, that they've communicated over the last several meetings.
Okay. Stephanie, thank you both for being with us this morning.
Thanks, Becky.
Right, up next, former White House senior advisor to President Biden, Amos Hochstein, is going to join us for the latest on why he says the world is heading towards a cliff because of the war in Iran when it comes to oil and fuel supplies. Squawk Box will be right back.
Joining us right now with the latest on the U.S. and Iran negotiations, former Biden White House senior advisor Amos Hochstein. He's managing partner at TWG Global. Good morning to you. We've been trying to make sense of it all morning. The markets, you can see the oil is up. Equity markets, by the way, relatively unfazed by all of this. But how phased or unfazed are you?
Well, good morning, Andrew. If you're taking all morning trying to make sense of this, may take a little bit more than this morning. Look, we're in a stalemate of frozen conflict, frozen negotiations. And in the meantime, the straits are closed. So we're in a no war, no oil, no straits condition at the moment. President's going to China, so we're not going to have a lot of breakthroughs this week. The equity markets are unfazed because they're operating under the assumption that the oil markets will normalize relatively quickly, that we'll get a deal relatively soon, and there are no bad headlines of war, right? No missiles flying. The problem is that as long as missiles are no flying, it doesn't really matter because the oil markets are going to continue to see this disruption. And this disruption is a slow rolling disruption. So it affects poor economies first. Equity markets, unfortunately, don't care about poor economies. It then goes to middle economies and eventually to larger ones. And only at the very end does it hit the United States. So we're still a long way from it having a major impact in the United States. But this elevated price that we're referring to, we have here, is something that we're going to be with for quite some time. And the longer this goes, the longer it will take to normalize afterwards. So this $90 to $100 oil is probably with us for quite some time.
What does quite some time mean?
I think it's hard for me to see how we, even if the straits open in June, right, in early June, it probably means that we are in a higher price environment into the end of 2026 and early 2027.
What would lead you to believe? What would lead you to believe that that the straits could open in June? We had Admiral Stavridis on earlier, and he suggested effectively the only way to truly open it might be to have some boots on the ground, but to have an entire force and ships there. You could be spending. He was, contending maybe $1 billion a day to do this.
$1 billion a week.
Sorry, $1 billion a week. $1 billion a week.
So two different scenarios of opening it. One is opening it by force, and the other one is opening it because we get a deal. I still believe that we're going to be in a deal space. I don't believe in opening the straits by force. I think it won't even cost. It'll cost more than $1 billion a week and we won't do it. Taking that area militarily by force doesn't change the fact that these drones can fly, 13 to 1,500 kilometers at a low altitude, and all you need is one tanker gets hit, and now no tanker goes again. I think if you start putting boots on the ground, you're talking about oil prices that are much higher, because that will indicate to markets that we're probably in a very protracted conflict. Look, I think the tenets of the deal are fairly known. I think we're dealing with some details that both sides are arguing over that would allow them to declare real victory. Part of the challenge of having a negotiation that is done bizarrely so publicly, publish every draft, every tenet of every potential. But I think the deal space is there. We just have to have some compromise, and we're dealing with a country with a huge ego and a president who also has a lot of face saving that he cares about. So that's the problem. But after the China trip, I think that we're going to be somewhere to a deal space. If we don't get through this deal, Andrew, by the early June, then I do think that we are going towards that cliff. And when you fall off the cliff in oil and energy, it's very hard to get back up. And then it's not about normalizing. Then it takes a really long time.
All right. Tee up the China meeting. If you've been in these type of meetings before, what does President Xi tell President Trump? What does President Trump tell President Xi?
Well, I think they have a number of different topics. I think President Trump did not want to come to this meeting with the war in Iran still ongoing. The Chinese are very well prepared for this war for the long term, but long term means 4 to 6 months. After that, they get into a place where this costs them. So I think they're starting to get nervous about this becoming protracted, because even if you have a lot of reserves, as they do, they are already reducing their imports by about 5.5 million barrels a day. You extrapolate that to what they're doing from reserves, and they're taking out about 150 or more million barrels out of their reserves. So at some point, this starts hurting them. So they want this over. The second issue, obviously, for the Chinese is going to be to reduce the level of support by the U.S. to Taiwan, to say, weapon sales and other economic support for Taiwan. And the third is going to be just the trade issue. What President Trump really wants is, it seems, is to have Chinese investment, open up the door to Chinese investments in the American economy. The Chinese are willing to do that if it allows them to invest in areas that we've been very uncomfortable with them investing, specifically in areas of technology, areas of electric vehicles, other things where the Chinese have both dominant market practices, and they use that for other
And where would
espionage
you
and
land
other
on that
things.
idea? If China was allowed to buy data centers, for example, in the United States, would you say that's okay, not okay?
I would be very nervous. I would be very nervous about the Chinese coming on high tech and in specific electric vehicles in the United States, both from their history on market competitiveness, where they dump in the markets and destroy our free markets and take advantage of the free market in order to advance a controlled economy. So I'd be open to Chinese investments in a number of sectors, but I think in advanced technology and electric vehicles, I would be very, very nervous about that.
Okay, Amos, we're going to leave it there. We appreciate your time, and we'll see what happens later this week. I'm sure we'll talk more with you about it soon.
All right.
When we return, a wrap-up of today's big headlines and what you need to watch at the opening bell. We'll be right back. Quick check on the markets after that latest CPI data. You'll see right now the Dow has turned around. It's now up by about 42 points. S&P futures down by 15, and the NASDAQ continues to be off by over 200 points. Treasury yields have picked up. They've been higher all morning long, and in fact, right now the 10-year is sitting at 443. And then if you take a look at oil prices, it's been kind of driving things throughout the course of the morning because oil prices have been sharply higher. WTI is back above $100 a barrel at $100.77. Brent is at 107.23. Finally, check out crypto prices. Bitcoin off by about 1.3%. It's trading above $80,000.
Meantime, breaking on Squawk this morning, a lot going on. Consumer Price Index, a key measure of inflation, matching estimates month over month. That excluding food and energy, the number came in at 2.8% year over year. That's still slightly above expectations. eBay officially rejecting a takeover offer from GameStop CEO Ryan Cohen. eBay's board said the proposal is neither credible nor attractive. And Citi upgrading Lowe's from neutral to buy ahead of next week's quarterly results. Citi saying the home improvement retail chain should beat estimates and outperform Home Depot. Lowe's is up by 2% in the pre-market, but down 23% from the February high.
Well, we'll take a quick look and see after that hotter number, 2.8. That's that's the best you can say. If you look at the look at headline,
Right.
3.8 is the highest we've seen in a while, but the Dow's actually up. As you can see, not a lot, but up. It's reversed. It's up 30 points. The NASDAQ has improved a little too. It's down over 300 points a little bit earlier. I think bonds. You're seeing some of the hotter CPI data reflected in the 10-year, definitely 4.43%. And Rick Santelli pointed out we have a big auction coming out this afternoon, so we'll get to test whether 443 is attractive. We will be back tomorrow.
Tomorrow.
I wish
some
you
of
were
us.
here. We have our daughter Natalie's graduating.
Yeah,
Goodbye.
which is a good reason not to be here.
It
Make
is.
sure you join us. Squawk on the Street is next.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange. Kramer's at FedEx headquarters in Memphis today ahead of his exclusive with Raj Subramaniam tonight on Mad Money. Meantime, some equity weakness here. Is the highest in 3 years. Biggest jump in food prices in almost 4 years. Long bonds back above 5. Oil, meantime, back above 100 as the president says the ceasefire with Iran is on life support. Roadmap begins with CPI, rising on this spike in gas prices. Kevin Warsh moves a step closer to being confirmed as the next Fed chair.
Also ahead, geopolitics is on Wall Street's radar this morning amidst heightened U.S.-Iran tensions. President Trump is heading to China tonight for those high-stakes meetings with President Xi. Plus, eBay rejects GameStop's unsolicited $56 billion takeover offer. Remember, it was half cash, half stock. But they call it neither credible nor attractive.
Let's begin with Jim this morning at FedEx in Memphis. Jim, I know you're psyched about today's show.
Yeah, I really am. And look behind me. This, by the way, just so we have all the introductions, this is Livia, okay, and this is Alexia. They name planes, employees, names, okay? And I think that we should get that straight, and it's really kind of a 3-box here, too. You know what? This is a great place to discover exactly how bad what oil's meaning, because they have a fuel surcharge. And so far, the fuel surcharge has been passed on pretty well. David, you know, when you see the CPI number, it's pretty obvious that the idea that you could keep inflation under control during this period is just out the window. And so the question is, we always hear the same thing, gasoline up, and we all see the prices. Midterm elections, therefore there has to be a settlement. I don't know, David, I maybe after China, but I just don't think that after that life support comment, I see something happening imminently. I don't know how maybe you take it differently.
No, I don't really have a view. I rely on a lot of other people to help me sort of understand what's going on here. What I would say, Jim, is the market has not paid close attention, I would argue, at least, to what has been going on, and then we episodically sort of tune in, and we tune out. It doesn't appear that either side is going to go back to war, so to speak, in the way that it was, but at the same time, the settlement certainly seems far off. And I guess as long as the strait is more or less closed, that's the key question, remains the key question. And what the impact will be so many of the experts we bring on CNBC have talked about really starting to see the true impact in June, let's call it, Jim. And I do wonder whether we'll be talking even more about that than in terms of its impact on the market, if in fact they're right.
Well, here's what people are missing. Yesterday was a really horrible day. And there was a huge part of the market that just cratered. We got a Lowe's upgrade today. I think that's kind of like someone saying, hold it, wait a second, things have just collapsed. Anything involving retail collapsed yesterday, as if just a giant rollover. Didn't matter whether it was for luxury good, it didn't matter whether it was for Dollar Tree and that whole cohort. Now today, I think we are seeing the denouement, that big jump up yesterday, where everybody who bought the top, I mean, Carl, there was just a tremendous wave of buying before the market started. That's never good, and it was really reaching. It felt so toppish that you can see the you can see the detritus this morning. Almost everything that was red hot is down today. So, Carl, I mean, this is set up for a reversal day conceivably, except for the stuff that you would normally want to get into, let's say the finance or retail, because they were down. They're hurt by this this number this morning. So I don't know where to go. I don't know where the money goes today, but it doesn't go to tech.
Yeah, it's hard to find a path for today's session. You mentioned retail, and the XRT was the worst relative to the S&P yesterday, I think in several years, Jim, getting close to some lows. Under Armour, not so good today. And your point about the consumer's good given CPI, we did get our first negative print on real wages, and that's going to be the first one since April of 23. So that's been a budding conversation we've been having.
Yeah, last night I had to change my stance a little bit. I said, look, I don't think we're 1999 because things are just so crazy and different. But in 1999, I mean, everyone said, well, we were 1999. 1999 was great. Yes, it was horrible. And the stuff that happened in the last 3 hours, where you could just see all these stocks roll over that are in tech, and you realize, wow, the money got so high. It was so wrong. And then you take a look at some of the stocks that, you know, there were 42 stocks in the new low list, that's in the S&P. They were all quality names. They were great companies. A lot of the companies are doing well. I mean, David, this rush into the data center, and I'm a believer in the data center, and I know there's a lot of the data center this, data center that. But, you know, we can't just have the data center. There's also another economy, and that economy is no longer any good. And I really think that, I don't care if the president knows it or not. I mean, the president can say it's great because he likes to say it's great. That's what he likes to do. Hey, it's great. Micron's great today. It's only down 25. I mean, I can't play that game. David, I'm looking at stocks that are down, that are going to go down, that are going to be down big because they're up on a spike, and you got a lot of bad money in them. And then I'm looking at a lot of other stocks that nobody likes. So I don't know, Dave. I mean, I'm trying to. I mean, Simon Properties. Simon Properties is good, right? Simon Property, that's a good one.
Yeah, you sound a little negative this morning. I don't know what's going on down there. 499
others.
You're all right?
Can you find one? This one might be good back here.
Well, I don't know.
Am I all right? Am I all right? Yeah, I'm fine.
One day with a reversal, and you're suddenly what? You're worried? I mean, come on. The SMH is still up multiples. Nobody is arguing that there isn't going to be a memory shortage still. I'm sure you've seen, you know, the various pundits that are weighing. By the way, every day, more and more. There's no doubt about that. But one thing I do remember is it's impossible to figure out whatever you're saying on any given day.
It's time to crush the hot money, David, is all I'm saying. I don't want to crush. A lot of people went and bought a lot of stocks that are so, you know, SanDisk, David. I mean, do you think it's the United States of SanDisk? United States of
I do.
Qualcomm?
I think it's the United States of SanDisk. I think it's the United States of Micron. I think it's the United States, yes, of Western Dig. And then it's the United States of Intel because of the CPU. This is all about the data center. This is all about the move to inference. This is all about the need for more CPUs and more memories as a result of the agentic era that we are now in, where everybody's going to have agents in these enterprises. That's what's going on right now. And that's interesting to look at.
That was a great show. That was a great show. Is it time for the, what do you want to do?
Now it's time for you to talk to FedEx. Yeah, whatever you want to do. Now we can talk about a lot of things. Come on.
No, all I'm saying is that the hot stocks have to cool off. Carl, this is a moment where the hot stocks got yesterday. We saw what calls an island reversal. Stock starts up and then close.
I missed the train. We want to pull back. I missed the train. I tried to take the Buffett train. And I'm all cash, and it's run up, and I can't help myself but cry. I missed the train. Good morning, retail traders. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being a straight guy, not a homosexual. Nothing wrong with homosexuals. I'm just not one. And now the time is near for which I'm certain. I was just 1 penny off of resistance on the AMD the other day. After hours, what time is it? 8:09. Ooh, nice little spike up on PLTR. Nvidia's holding up. Tesla at 440. Had a 450 target on that yesterday. Let's see if we hit it. Whoa! Real close to my 450 target yesterday on Tesla. Not fair. now. SPY hit my support multiple times this morning. 435.70. I'll go get my coffee going here. I'll try it with some almond milk this time. Oh, mama, I'm excited. I'm almost out of breath. Good morning, retail traders. Good morning, Subway, Jesse, Greg, or G, Randy, Angel, and Two-Cap. Two-Cap must be a rapper.
Washboardjim on the market floor, trading moves like a lion's roar. Sneaky snakes slithers past the rest, breakout moves, he plays them best. Jim likes kitties and telemarketers too, teaching fools like me and you a work of art. His strategy's tight, Washboardjim and the trading fight. Pullbacks come, then the charts will rip. He calls the shots, never loses grip. Selfless soul with a heart of gold, teaching secrets that never get old. Jim likes kitties and telemarketers too, teaching fools like me and you a work of art. His strategy's tight, Washboardjim in the trading fight. Lines and candles, a dance on the screen. Risk and reward in a world so mean. But Jim just laughs, tips his old hat.
Fight, 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 fight. Fight, fight, fight. Today I'll make sure that I take off my shoes and my platform is up. I hope you watched this morning's video. Jimmy likes titties in paradise. Pine boards. Ash Grove. Them look nice. Wonder if pine would be a good wood to use for siding. Randy, could pine work for siding? 2, 3. One by 12 by 14. Those are huge. Pine wood. P-I-N-E. Would that work for siding? It's even been dried and treated. Damn. $14 a piece. 1 by 12 by 14. I mean, 1 inch is thick. How much would a couple 14 divided by $2,000? Divide by, what am I saying? 1, 2, 3, 1, so it's 3 be. Divided by $14. I got it. $142 boards. That should be plenty to do the roof and the siding. Walnut would be better. more I watch CNBC and listen to them every single day, they're just way out of touch. CNBC's become a socialist channel. There ain't nothing about, I mean, it's just a no-brainer. Today they spent 20 minutes talking about how bad AI was for the children. I'm going, are you kidding me? What's bad for the children is bringing them to a public school and teaching them nonsense. Oh, if I had kids, I would not. I'd either be telling the white lady, you know, you're going to sit home and homeschool these kids, or we're going to put them in a private school. So being as this Colombian has a little bit of almond in it, they say, or nutty taste, we'll see how this almond milk works. Just doesn't have that. I tried to froth it the other day, and when I added hot water to it, hot coffee, it kind of lumped it up. So I didn't froth this one. Not bad. Retail traders. Remember, I'm asking for people if they want to help donate for my vacation. Don't be stingy. Remember, I'm at... Good morning, ARM. V for you. I got my arm out to you. Inflation jumps to 3.8% in April. Kills Fed rate cut hopes. Idiots. I don't believe their numbers. I don't. Oh yeah, man. Oh yeah. Yeah, I was around for the dot-com era. What do I see different? Well, dot-com had to make people think. They had to get on the internet. And AI gives you the answers. That's the difference. AI gives you the answers, and you got to know if you got to research them, make sure they're correct. As long as they ain't opinionated. .com is like the, I looked at the .com era as like the car industry era, when there was a bunch of car companies that came out, and only 4 or 5 survived. And that's the same thing with the .com era. There was a bunch of, I had I forgot what, MySpace, and had a bunch of people trying to break out. Same as what's happening in China with over 300 EV car companies coming out. Only a few of them will survive. And that's the same way with the EV sector. It's more or less for the people that have money and are privileged. But the dot-com era opened up doors where the AI just gives you answers. That's what I'm thinking. Only a good handful will survive. Gork, one of them. So here we are at open. We're coming to the 200 right now. You got to remember that a lot of these fat cats are very bearish. We got a head and shoulders. I'm going to set that alert up above that head and shoulders. I would go for the inverse head and shoulders over the 200, I think. Or start in small here. We're in a... What happened here? Oh, there it is. A lot of people felt like they're left behind. A lot of bears out there. I didn't see too many bear posts this weekend like I have in the past 3 weeks. Now it's probably time that we're going to be bearish. So SPY, the 737, what was that, an airplane? 737. Prepare ye in the name of the Lord. We just hit support. The computer's moving exceptionally fast this morning. Okay, I'm going to start my first position here at 112. Jimmy likes titties in paradise too. Good morning, everybody. We're under the 200, so that makes us bearish. If we break it, there we go. 121. Come on. Come on, you chicken liver. Nah, a lot of slow volume this morning. Sophie. I'm watching Sophie to go long. Come on, do something here. It's taking its sweet time. This has been 4 minutes at this support. Scanner ain't producing nothing on the penny stocks yet. ACHR. There's 118. Let's break it. Come on, man. Why ain't you got anything going yet? We don't have no volume, I guess. I don't think it wants to go. Triggered! Spy triggered. Okay, I'm going to add on right here. Come on, no. 195. Tweezer bottom. Blutch. Didn't give me 95. Today's loser is Hims, Marvell, Mr. Intel's down, Oracle, Joby is at 1044, Cat's down 15. There we go. .95. Now we need a breakout. Right now we're bearish. Where's the 9 and the 21? I'll put the 21 on here. This is all fucked up. What's all these simple moving averages on here for? Huh, I can't get them on. There we go. Oop. Break it. I'm green. Rounded up to 104 average. So I got 20 contracts. If I don't feel bullish, looks like we could have a falling wedge or a bull flag, bull flag. And I can get out right here, but I want to see if we're going to break out. Right now would be the time at 113. But if I get 120, whoo! See, we're at resistance right now. We're at the 9. We're having a boatload of fun. We're thinking about it. Yeah, the bears are in control right now. We got higher lows. We got a symmetrical flag. So 63, definitely a hard resistance to break. We're bearish because the 9's under the 21. SPX trying to break the 9. And we do have a new high here on a QQQ. Okay, should I sell it? 114, 115, let me get 120. And then watch it go to 150. If it breaks this wall, boom. 115, I would be happy with that. How's he do it? 117, baby. Now we're coming to the 200. So make a business decision based on your morality. 119. 20! I'm out. Come on, give me the rest. 120 and 124. Does anybody know who I am? Does anybody know who I am? Randy? Who am I? I'm the guy that always gets out too early. Profit is good. So do you understand what I did here? I got in at the little bit above the inverse head and shoulders, and then it come down to a double bottom, and I added on, and I could have got it cheaper a little bit. And then I waited for it to break the wall and hit the 63 EMA. And I have a problem with my 63 right now, I think. No, I don't have a problem with it, but I'm going to make it bigger. Apply. Much bigger. I like it big. So that'll probably be the last time I use almond milk in my coffee. $133. Blotchism. We just hit the 9 or the 50. And the 9's crossing the 21. We broke the triple top resistance. We got a head and shoulders with a neckline. SPX held pretty well. Inverse head and shoulders with a higher low. Now it's coming back down. Prepare ye in the name of the Lord. It's retesting. This is a retest. Where are you? There you are. SPX. SPX, baby. NVIDIA breakout. Oh, IWM double bottom. IWM double bottom. IWM double bottom. SPX. Today's the 12th. 7400s. Okay, SPX 7400s. We're below the VWAP, we're bearish, but we're at support. The 7400s at $5.70. There it is, right there. Get it. You can do it. You can do it. Snake, breakout, pullback. SPX calls, scalping lotto. There's 550. Strike 7400 at $5.70. Oh, I put a 0 in there. Jimmy likes titties and paradise too. Oh, for me and you. Don't give up. Don't give up. Uh-oh. No. Boy, this thing dropped big here. $60. There it goes. Come on. Oh, they have to throw. Trump says Middle East ceasefire is on life support. It can't breathe. Should have grabbed one at 510 if I could have got in, but I don't think I could have. Right now I'm cold brewing coffee. It's supposed to be more powerful than if you brew it. We'll find out. And back to almost even. Come on, break out, baby. Break the 9. We're bearish because the 9's under the 21. Now we're talking money. Jim, you're up $50. Have you ever thought about selling? Nope. We got a triple top coming up. We have a Head and Shoulders right here. Well, I didn't see that. 680. 680. Please make a business decision. $7.10. Oh, how does he do it? How does he do it? Oh my God. Everybody wants to know how he does it. That's how he does it. Bake the raisins. How does he do it? One trade at a time. IWM new low. We got a triple bottom on the SPY. Should I try it again? Jim, 3 times the charm. Hup. The 7400s at $4.90. $700s at $4.90. This is trade number 3. Lord, pay me my mortgage, for I'm oh no, stop. I went out and had Mexican food yesterday. And I tipped the Mexicans. Oh man, come on. 420, Randy. Still in. ST, I am still in. I think $4 is a good place to add. You can do it. There's 410. I need to hold this. Come on. Baba at 134. Oh boy, PDD looks sweet. China. I got $4 and $4.90. About to have to stop out of here in a second if this thing don't start to reverse. Do we have any cleavage today? Yes, we have cleavage. She is so cute. I think her and I would hit it off real good. We'd be talking about NVIDIA all day long. I'm still in the trade. I'm going to give it just a little bit more time here, but now we got a doji. Oh, that didn't last long. Okay. AMD at the 200, AMD at the 200, AMD at the 200. Spiked almost to my support. Within 15 points. Spies almost at my support within 15 points. We got a cup or J hook on Tesla. If this keeps up, the bears will take control. This is the third dip right here. We got to do something or I got to get out. Not take a big beating here. This is the last chance. Everything's in threes. We got HIMS down 12%. Oracle down $8. Mr. and Coin are even down, with Mr. being cheaper. STX down $28. Oh, what is it? SNDK? SanDisk. Watch SanDisk. Come on, break out. I need a breakout right here. I got two more at 330. Come on, you can do it. Big old bounce. I'm gonna look at SanDisk while I'm fumbling around in this trade. What the fuck? $15. Oh God, they're so expensive. No, I can't trade this. It'd be 1,800 if I did. No way. I need a breakout. I'm green. Barely. By break above the 735.50. Okay. I could get out even here, or a little $40 down. We'll see. Right now we got a head and shoulders, so we could break out a little bit and then pull back and retest that right shoulder. First sign of positiveness that I've seen here. First pattern is a fallen wedge. Same what we had yesterday. I don't see the wedge. If we break out of that, then we're looking good. Right now we're looking fairly good. I mean, it's got a little bit of hope here. And all you need is a little bit of hope. I'm going to throw this coffee out and make some good coffee. Better a cider. Maid, please bring me a cup of cider and a volume. A volume. A volume. Go away. little girl. Go away, little girl. And back to even. Just need a little bit mustard here. Red day, Dow Jones down 233 and the NASDAQ down 300. Russell 2000 down 34. And the green ones are Apple and Nvidia. MU down $4. Oh, there we go. Oh, man. Come on. Blink it. There we go. There we go. Hey, 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 there we go. Come on, don't give up yet. $4.40. Jim, have you ever thought about taking profit? Hell yes. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being out of the now. And I'm out at 450. So that was a pretty good trade. I tried to get 460 and it wouldn't let me have it. There it is, 460, 470. Did anybody take that trade with Bobo? Say yes. Brandy? Somebody. 490. Okay, very good. There's 510. Now, do you remember what I said? There was a statement I said, and I'm going to do a video right here. So prepare ye. Put on your thinking cap. Hello, my name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I just called out the SPX, and I want to show you something that can build your confidence when you're in a trade and you're down on it, but you're watching it form a pattern, and that's going to be the SPX. So I'm sitting here looking at the SPX, and we started going down, and I took trade off the triple bottom. Then it dipped more. Thought I had me a trade here, and it dipped more, so I added on to it. Well, as we started building, I'm going to clean this up a little bit. Clear. So as we started building, I noticed that we had a head and shoulders. And I'm going to draw that trend line right in here. That's called an inverse head and shoulders. We were starting to develop an inverse head and shoulders. Then, to go along with that, we had what you call fallen wedge. So basically, these are two bullish patterns that you look for when you're in a reversal in a trade. So once I started seeing this, I said, we got to break this trend line, this 1, 2, 3 triple top, and that we could run up and then pull back and have the right shoulder tap one more time to go long the rest of the day. So this is called an inverse head and shoulders, where you have your left shoulder, your head, and your right shoulder. And a lot of times I'll wait for the pullback to hit that right shoulder or the previous resistance, which was this triple top. So once we broke the triple top, that really started getting me excited. And I've already cost averaged down in this trade 3 different times. Basically because I saw that head and shoulders come in. And that built my confidence to go ahead and add that other option of 330 down at the bottom. So once we come up and we broke it, we had 3 white soldiers and I got out of the trade a little bit sooner once we hit the 50. So that's basically what I'm saying is that's an inverse head and shoulders with a fallen wedge, and that'll build your confidence. I'm waiting for it to pull back again and land off the 21 and take this trade again, because I think we could come back and compete that with that right shoulder on this inverse head and shoulders. So I'm Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and not being a homosexual. Gays are fine, but I'm just not one. Well, that's kind of personal, Jim. I don't care, because I'm narcissistic.
Narcissistic Jim, with his ego and his wit, doesn't
Give a damn what you think of him one bit.
The market takes
a dip, and this reason you'll buy, yeah.
bitching at Molly Carolyn, still the apple of his eye.
Burp it up, Jim.
Let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care
What you think?
He'll burp and fart out loud until his room stinks.
Woo!
Candles on his screen bounce like titties in the night. Burps get so loud the neighbors
Say that boy ain't right.
Bull or bear, calls or puts, doesn't matter one bit. Jimmy's face can't wait for Nancy to come and sit. Fart for a dip, ass making noise. Burp for a rip, cheers from his boys. Jimmy is grinding away on his washboard toy. Burp it up, Jim. Jim, let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Lots of fun he has, his ego's ablaze. Burps and farts collide, the room is so amazed. Narcissistic Jim, the legend, the king, playing his old washboard till that closing bell rings. Narcissistic Jim. Narcissistic Jim. Narcissistic Jim.
Yeah. I'm now 3 for 3 today. How does he do it? He does it because he's bullish. I don't care what these fat cats say. 95% of the time they're wrong. Or they tell you to jump in a trade at a triple top breakout, which is foolish. They're some of the worst pumpers I've ever met in my entire life. Thinking IWM will test low of the day. Or it will stop at this head and shoulders. Off this here 3 black crows. Right there at 735.22. If that don't do it, then you got a triple bottom at the low of the day. Same kind of pattern. Inverse head and shoulders with a, I mean, just looks like, oh, that's a SPY. You idiot. Yes, I think it can do a double bottom. I wouldn't count on it, but I can. It's possible. It's very possible. And right now you're at a head and shoulders here too. So that's possible to hold. I wouldn't jump in the trade until it broke the 63, that red line, 822.15, and did a double top break. That's where I'd look for it to break resistance. That's definitely what I would wait. I'd wait for that because right now you're bearish 9 cross down over the 21. So you could come down and do a double bottom and then grab it there, small, just in case it didn't break out. And if it started breaking out, I'd add on. I'm going to put alert just a little bit above it. I'd wait for a double bottom. $281 and then start my position. And I can get back in the SPX or the SPY right here if I want to, but ah, damn, man. They got me now. One of them called me Jim the other day. Prepare ye in the name of the Lord. Prepare ye in the name of the Lord. I'm going to move these up to the 63.90s. Prepare ye in the name of the Lord. There it is, right there. $4.60. Come on. He's doing it again. He's doing it again. Damn. No. Yep, the market's a bloated pig, that's for sure. And today, I might have to get out of this one. Come on. $3. $2.90. Okay. I'm gonna quit playing around after this. I'm getting a little bit carried away. Meta hit my support. A little shy of it. Yeah, this ain't looking too good. Might get stopped out. Coin is at my support line. I don't know if it's any good. Upcoming earnings. We got NVIDIA and Cisco and JD. Penny stocks. BZFD's up 100%. I don't see why, but let me go back and look at the news. BuzzFeed shares are trading higher after the company reported first quarter financial results. The company announced it will accept a majority investment in Allen Family Digital. Penny stock TDIC. Moving pre-market. We got I'm going with it. Oh, come on. 250. Now 440. 400. 400 right now. We got an inverted doji on the /ES. It's a bullish sign. I think I'm okay. That's first sign I've seen anyway. And a triple bottom. So that looks good. All we got to do is break the 9. So this is called an inverted doji. Like an inverted hammer. And right now I'm looking a lot better. I'm down 200. So I could sell it.
Right now, qualified homeowners can get a full security system worth up to $1,200.
Jesus Christ. Come on, I'm down 80. Down 40. Almost even. Now, if I don't feel good about this trade, I'd get out right here. But I'm going to hold on. If I break the 9 on the /ES, I mean, this is an exit idea to get out if I want to get out and not be down $440. And that's just in 3 candles. But if we break, this could be another $400 trade to the good. Come on, break it. Last night, I took my nephew out to eat. Took him to a Mexican joint down the street. I had mahi-mahi tacos and they were a treat. I had a little Mexican chick tap me on the back. I looked into her eyes. Baby, I love you true. Let's break the 21 EMA. I'd eat your mahi-mahi taco any day. I took my cousin up the street to get him something to eat. My nephew, don't hold me back. Let's break out of this here shack. I got some Colombian coffee yesterday. Let's break the 21, baby, and we'll go roll in the hay. We're at 380, baby. Let's break out today. Take them fears away. I could sell it right here. Hold me tight, dear. Let's break the 50 SMA. Oh man, 440. I mean, I can't. Woo! Baby! 450. 460, 470. Oh, my name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being out at 440. Do you understand? I used to finger pick with my fingers. Some call it phalanges. I call it fingers. Make sure when you wipe your ass, you wash your hands. It really depends if you're a man or a mouse. Should I jump back in this trade? I think I can, but I gotta free up my hands. Wash your hands. Thank you very much. That's trade number 5. So you know what I do? I must take a dive and go cook lunch. Today we're going to have salad and cheese chips. That all right? I think I'm all out of tuna fish. Sardines. IWM. I don't know. I think this is going to get boring here soon. We're definitely bearish today, so we don't want to fight the trend. Will the double bottom come? It's another Head and Shoulders that fails. I'm not feeling bullish at all. Not until we break a resistance. And that's going to be the 63. If I didn't pick up this guitar, I might be in prison today. It give me something to look forward to every day. If I didn't pick up this guitar, I know I'd be doing life. It changed my life. Changed my life. Okay. Margetta was up yesterday. AMD down $13. We have a symmetrical flag, and I'm going to turn this air conditioner up so I won't get cold. Oh, God. What time is it? 9:50. Time for lunch. AVGO. We're at a lot of support levels right now. AMD's got a triple bottom right here. IWM's coming down to a double bottom. Pay attention. Big C. Got a lot of baby candles right here in the last 5 minutes. Hi. Gosh, more prayer. That's all we do anymore in Bible school. Let's pray for everybody not to die. This could be it, the double bottom. This could be the final say today. Markets might reverse here, Jimmy says. That's interesting. Plastic railroad ties. 300 pounds each. Wow. That's crazy. Have you ever heard of plastic railroad ties? 300 pounds a piece. I don't think you'd have to nail them in the ground at all. Hey. Okay. We're going to find out real shortly. I'm going to turn on the TV here while I go make my lunch.
I'm Sam Bartis. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 from schwabnetwork.com. Trading 360 up next with Marley Caden. I'll catch you later on, market on close at 3 p.m. Eastern. For now, have a great rest of your day.
Marley, show some cleavage.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis of breaking news, and sharp trade ideas minute by minute.
The show is built for action. We break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Cold brew coffee.
We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. We've got a great show in
She
store
got the red dress on again?
360 Spotlight. The CEO of Clean Spark is joining us.
Girl, don't you ever change?
Earnings and discuss how the business has pivoted amid the AI build-out. Our disruptor today, AST Space Mobile, which is falling after missing top and bottom line estimates for its latest quarter. Then in our 360 round, we'll dive into the earnings from On Holding. The footwear maker is lower today despite beating expectations. Lots to get to and more than just those stories. But let's check in with the markets this Tuesday morning. We do have red across the board here. Unfortunately, I'm matching the red today, not on purpose. S&P 500, 0.75% lower at 73.57. On the NASDAQ, we are down 1.5%. We're 28,896. For the Dow, we're 0.5% lower, 49,432. And on the Russell 2000, we are at 22,1486. That's down almost 2% right now. As we take a look at the 10-year ticking higher, we're at 445. The dollar also slightly stronger on the day at 98.25. For gold, we're looking at 46.7880 a troy ounce. That's 1% lower on the day so far. Crude oil back in triple digits, up almost 4%. We're at 101.91 a barrel. And Bitcoin hanging on to that 80,000 mark, 80,550, down about 2% and getting very close to falling below that threshold. We want to welcome in Alex Coffey, though, our senior equities contributor. Take a look at a name on the move today. We're talking about hims and hers. Some sort of shocking earnings came out yesterday. We covered them live on air together yesterday on Market on Close, but a loss in the quarter, a miss of expectations pretty much across the board. So take us through these numbers here.
Yeah, and the response was sort of a delayed onset response because, as we said, I think investors were hopeful that there might be some explanation that made sense on the call, and just didn't come in terms of alleviating some of the uncertainties that this financial report suggests. And so, again, this is stock that's in a transitionary phase, but you look at it, revenue grew about 3.8% year over year, missed the estimate slightly, swung to a loss, as you mentioned, 40 cents on a loss per share versus 20 cents on EPS last year. Adjusted EBITDA was down 51% year over year and missed expectations. Gross margin came in at 65%. They missed expectations. Subscribers met expectations. They grew about 9.2%. But the big story is as they transition and try to diversify this a little bit here, operating expenses are climbing, and they were up 27% year over year. They were higher than expected. But really where things were circled and where the uncertainty, I think, mostly lied was in the forecast. The forecast just didn't leave investors with a good taste in their mouths. They see revenue for the second quarter a little bit better than expected, but the adjusted EBITDA plunging in terms of where the street was hoping it would be, expecting around 70.1 million. They provide a range of 35 to 55 for current quarter. And same story when you look at it on a full year basis. They adjust down their full year guidance. They miss expectations, and revenue, although better than expected, if the gross margins are such a different story than what the street had anticipated, it really doesn't alleviate that pressure.
Yeah, I think it was one of those things too where some expectations were high. We wanted to see growth in this GLP-1 space because that's its bread and butter. But like you said, we got more costs associated with bringing in these name brands, ending that lawsuit with Novo, now having Wegovy and Ozempic really matters for the platform. But that costs more money than compounding your own drugs, and they sort of lost that avenue to them. Peptides were sort of expected to be the big winner, and they were mentioned on the call, but in terms of the metrics and the numbers, until they're recategorized in a way that can be meaningfully profitable to hims and hers, they're not necessarily a tailwind. They're just sort of a future mention. As far as what you saw in terms of commentary in the wake of these earnings, I saw some notes that were still bullish despite the quarter itself not giving the most optimistic outlook.
Yeah, it seemed like the general theme across bulls and those who are maybe kind of waiting and seeing, maybe more neutral or equal weight in this name, was that this transition is, one, ambitious, but two, creating a lot of near-term noise. And so a lot of them, especially the bulls, applaud the sort of diversifying away from GLP-1s, finding a more maybe durable revenue stream. But because it's costing so much right now, it's at the effective margins. And so despite strong international growth and some other things that were positives here, it's very cloudy right now as they try to implement a strategy that isn't quite there yet.
And it was very interesting. We had this conversation, a preview look at Hims and Hers yesterday with Rahul Shah from DocShah, and he said that his viewpoint is that Hims is trying to become the Netflix of healthcare. And it's an interesting parallel to draw because, I mean, the early days of Netflix were cloudy as well occasionally. So, Alex, from your vantage point, do you see any similarities here? Obviously, very different business structure, but, to look at it like that we were all a little uncertain when Netflix came out, a little uncertain when Tesla came out about what their future would be, and now look at these companies.
Yeah, I didn't catch the interview, so I guess I don't totally understand the analogy, but I guess the idea is it's a company that is disrupting a space that had been kind of stuck in the mud for a long time. I mean, you think about how content had been for so long. It took a mail order DVD type of company to come in and really shake things up. The same way you look at taxi cabs, Uber did the same thing. It took a while for them to get those economics to work. Tesla, to some extent, has been the only real company to really figure out electric vehicles at a mass scale. And you even think about the world of e-commerce on a much bigger scale. It took a bookstore, an online bookstore that kind of popped up during the .com to basically revolutionize how we interact with online shopping now. Does that mean hymns can do that? Maybe not, but doesn't mean that they can't. So a lot of people feel that way about this name, and it's why it gets so much attention. It's why it has these kind of moves and this kind of volume. But I wouldn't be the one to ask. I don't know.
Well, we'll be watching it regardless to see if it ends up in the names of those behemoths. But Alex, really appreciate you breaking down hymns and hers for us today. And stay with us. We've got Dale Smothers from RDS Wealth Management joining us next to take a closer look at the big picture.
Trading floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Oh, she's got your smile. Carl. Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab. Last year, my dad had a stroke, big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yeah. And now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim's my financial consultant. I called him that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Enter. This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full-service wealth management, and anything in between. I think I'm going to be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
You can do it too.
Welcome back to Trading 360. 360. I'm Marley Caden. Let's get some insights on the news shaping markets today. For that, we welcome in Dale Smothers, President and CEO of RDS Wealth Management. Dale, great to have you with us back on this show. I would love to get your thoughts on this market action we're seeing. You know, we've got a red day, a lower day, but it doesn't necessarily feel dire at all as this rally seems unstoppable.
You're exactly right, Marley. You know, the market is trading on two assumptions here, that AI demand will continue and that the price of oil does not bleed into the private sector, that it doesn't impact inflation, and that hopefully the Iranian crisis is over sooner rather than later. If those two things continue to be true, I think this market rally climbs higher, and I could see an S&P 500 at 8,000 points, but I don't think that comes without a pullback. And hopefully it's not too big of a pullback. There's a lot of headwinds that we'll be facing here in the midterm year. But as you said, it continues to climb. That wall of worry has been the mantra for the last at least 2 to 3 quarters as we've talked through this market rally.
Yeah, it certainly has. I mean, I keep waiting for the time we start talking about the pullback, but it seems to only be a one-off day episode that we get here, a couple days, and then we're off to the races again. So with those two assumptions that you just mentioned, an end coming or cooling to the conflict in Iran, and also AI demand being underestimated, which one do you view as being more important right now?
Yeah, I think that the AI demand is the most important, because if you think about the underlying foundation of the market, Marley, there's an interesting fact that we have to pay attention to, and that is that for the third time since 1990, only 3 times has this happened. And you know, you've got a lot of data in the 90s that is tech driven here, but for the third time since the 1990s, we've seen more lows hit in the S&P 500. More stocks hit their all-time or their 52-week low than the 52-week high, yet we continue to set these all-time high closes, and that is because of AI. AI is certainly the demanding factor here for the market rally to continue. And I'll give you another interesting fact. I thought this was very interesting when you look at this. You know, before the launch of ChatGPT back in late 2022, Marley, the S&P 500, if you think about all the market caps, semiconductors made up only 6% of the S&P 500. Now, this week, it just surpassed 22%. So if AI demand starts to suffer, or if we go back to late 2025 and investors aren't happy with AI spend, you could see the market begin to have a pullback, as we mentioned. That is not good for anybody, because we are led higher due to tech. We could easily go to a low point in the market because of tech.
And Dale, you just brought up my 2 most fascinating points from the notes you sent over. I flagged both of them, that we're now roughly about a quarter of the S&P 500 being tied to semiconductors now, as opposed to that 6% you mentioned pre-ChatGPT in 2022. But also, I think of similar importance here, that Friday was only the 3rd time since the year 1990 that the S&P hit a new high while posting more new lows than highs. So with those two things sort of hand in hand here, what does that tell you about breadth and also about how dramatically AI has reshaped the markets overall?
AI has reshaped the market for sure. And the breadth of the market, unfortunately, if you think back in the end of 2025, you start to see this breadth. You started to see a broadening out in the market. That is not the case anymore, and that's all basically happened over the last, say, 30 to 45 days. The market has went straight up due to AI demand, and what was being punished back in October of 25 is now being championed in these earnings calls. And you've got to consider a little bit of a cautionary approach to the market because of that, especially with the clients that we serve here, Marley. At RDS Wealth, our number 1 goal is to position our clients for
They said the same thing a month and a half ago.
If the market starts to
They said the same thing last week. They said the same thing the week before that.
Is this change?
They said the same thing 3 months ago.
And the idea that
They just keep saying the same thing over and over again. I mean, yes, we're overextended. and they want to pull back real bad so they can jump in the market. But they've said AI has been overpriced for over 6 months. And they're just mad. Oh, she's got cleavage today.
We could break more of that down. Really appreciate you bringing those two statistics to us as well. Dale Smothers, President and CEO of RDS Wealth Management. And we've got a lot more for you today on Trading 360, so don't go anywhere. We've got the big three coming your way next. Rick Ducat will take us through
Yesterday,
Skip is joining us with her picks for today.
Yesterday,
Comfort Systems and MSCI. That's next.
I brought out the heat map yesterday, and I said, they're all talking bullish today, yesterday. And I said, watch for a pullback. I said it.
And get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
There's different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got three stocks for you, three charts. Rick Ducat will take us through the technicals on those charts. Here to take us through her picks today, Jessica Inskip, Director of Investor Research at stockbrokers.com.
Oh, yummy.
Great to have you back on the show here. Would love to get your thoughts on the action that we're seeing today.
I love you.
The CPI print that we got this morning. I mean, we're still holding on firm to a sea of red on the big board.
That we are. I think it's interesting. I do agree that this market is narrowing, and it is supported by earnings. We have a really great underlying earnings picture. However, the market is a forward-looking machine, and I think the concern really comes from the inflation print that we got today. We are seeing wage gains actually come off for the first time in 3 years, which means the consumer could be squeezed. We're seeing Fed speak with delinquencies increasing, which tells me just that consumer aspect is being squeezed, which is causing yields to rise. And there's a certain level where yields rise, where equity markets have a difficult time surviving, if you will. So I think the real number to watch here is break-evens and short-term inflation expectations. The 2-year is rising more than the 10-year. That's giving an insight that short-term inflation expectations are certainly there. But we've got more data this week. I'm still very bullish on the AI narrative. It's just important to understand once the market gets really narrow, headline risk is increasing. And then on top of that, we've got President Xi and President Trump meeting today with a slew of CEOs and financial C-suite executives as well, and I do hope that we'll see at least some certainty about the closing of the strait. And then, of course, there's more AI narratives around that meeting even. So at least we're going to get some clarity this week, but it's the 2-year and the 10-year that I'm really watching.
All right, and with that AI narrative, your first two picks, I think, tie in here. And you chose companies that we don't talk about regularly, so thank you for that, for flagging these for us. Your first one today, Arch Capital. Why did they make your big three today?
So I did want to talk about the AI narrative, but since we've had such a run up in semiconductors and broaden that, backlogs for data centers are up 41%. I want exposure to that entire gambit, so I was trying to understand how can I gather exposure outside from the obvious, and insurance and reinsurance came to mind. So it's seems undercovered, and these mega builds need property coverage at scale. So for my first pick, they have specialty insurance premiums grew 15.7% year over year. So on that specialty side, property exposure reduced 35.6% year over year, but because insurance premiums on the specialty side, that's giving me that data build out. They're launching integrated coverage solutions for AI and data center projects. And if you look at their Q1 underlying combined ratio, that improved 81.7% versus 90.1% year over year. So they've got underwriting profitability. So I think it's undervalued. It's considered in the grand scheme of things in their competition and their sector a top tier underwriter, which is benefiting from AI infrastructure growth. And I think that's really important as we think about these data centers. We're seeing that even going through CPI with increasing energy prices, that's where we can see the cash flow. We're still trying to understand if CapEx spend will come elsewhere, but we can see it here. So I like the specialty insurance angle. I don't think it's talked about too much.
All right, and as we look at Arch Capital and their technical setup here, Rick, year to date, they're almost flat, but we can see in that time frame they've had some volatility.
Yeah, even over the past year, 52 weeks, pretty much flat as well. And more recently, too, symmetrical triangle type shape taking place here where our two boundary lines are converging toward each other, price bouncing around in an increasingly narrowing range. This can be suggestive of further volatility potentially on the horizon. Low volatility can be the precursor to high volatility, so if we do get a breakout beyond either of those two boundary lines, you could see an energetic reaction. So for starters, relative highs around here near 95 roughly. We did have some intraday fluctuations beyond that point, but also 99 as well up here. Double bottom lows here near 91.50 and another notable low all the way down here near 90. So those
symmetrical flag
to watch going forward. When we also look at our moving averages that we follow here, sideways drift for most of them. They're starting to cluster closer together. Also, again, suggestive of lack of directionality. The most significant are 251
put that 251 EMA.
Orange to the downside, 93.72, our longest term, and thus our most significant RSI, also portraying a matching triangular shape here. So one that we could be an interesting candidate for watching for potential breakouts, as I said.
All right, and like you mentioned, Arch pretty much flat year to date and also over the last 52 weeks, right now trading at 94.15, just slightly positive on the day. Your next pick here has a great ticker for its name, Comfort Systems, ticker FIX. Take us through why this is in your big three today.
Yeah, very creative ticker there. I'm enjoying that one. But Comfort Systems, they're becoming increasingly tied to AI infrastructure demand. So again, this has to do with data center build out and gaining exposure to that. So with their data centers and semiconductors now representing about 56% of their Q1 2026 revenue, if we were to look at their fiscal year of 2024, that's up 33%. So I see increased concentration, a backlog. That's important to me when I'm looking for these picks. And the company's competitive advantage is really within their modular construction. So they're
she's not wearing a ring.
Mechanical and electrical systems in factories, and then they ship them directly to hyperscalers. So it's a chip fab sites for rapid installation, so they can do it quicker. And in this age where we want something right away, that's extremely, extremely important. But so it's good to have that key differentiator which varies them from traditional contractors when I'm trying to look at the slew of things. And their manufacturing footprint is expanding. By the end of 2026, it's going from 3 mil to 4 square foot, so that's really a positive sign as well. But the AI infrastructure demand accelerating, and their backlog is also accelerating, and they have the hyperscaler exposure. I think this is a great opportunity to gain, once again, more exposure in a creative way to that data center build. We're going to continue to see.
All right, Comfort Systems a very different stock than the last one we looked at. Much more expensive, up more than 300% in the last 52 weeks. So, Rick, as we look at the technical setup here, what are the technicals showing you?
Well, as you said, our last chart was very, flat.
I'm gonna try it here.
Narrowing ranges. This is pretty much the opposite. We're having this stair-step type of price activity that you see punctuated by our earnings events, oftentimes where we have sideways consolidation.
SPX
to the upside.
7360s.
The jumps up are getting bigger and bigger, it seems like, recently here. Most recently topping out at 245.14. So now some levels that you could look out.
SPX 7360s. At 550. Very good job. Oh. Come on, you got to hold here. Get out. Down $40. She's a fox.
Global market participation and even going to emerging markets and all and so on and so forth. Their indices support demand for benchmarking and risk tools. So any international
She's doing a lot of hand talking today.
That accelerates growth into MSCI's global index franchise that they have, and they have deep integration into ETFs and institutional portfolios, and because of that, that's high switching cost as well. So I really think the thesis here is MSCI is embedded in their index ecosystem, and that forms a durable data moat, if you will, against AI disruption. So it's
up $100.
Something we've talked about a few times, and MSCI checks that box for me.
All right, Rick, as we look at the technicals here, I see you've got some converging lines. We have some lines heading toward each other here. Are you seeing durability potentially in this name?
Yeah, kind of a read that's a bit more similar to our first chart.
Damn, that thing dropped fast.
A ton of net movement here. You could say perhaps lower highs at what we have at the upper boundary of our chart, meanwhile higher lows. So our 52-week high happened right before our 52-week low, so a very precipitous decline that happened pretty fast there. For now, though, in the shorter term, downward sloping channel is the shape that I would try to characterize our price activity with, starting with our best close and going along the highs more or less from there. We can also see if we were to mark out some of those more significant highs, 600 was where we saw most of our intraday highs come in roughly, and then our best close, 608.04 after this earnings event was also the reason that line was chosen. Most significantly though, these series of highs here matching up with our low point that we saw after earnings near 574. That's something many traders are on the lookout for frequently. Relative lows here near 557 as well. Finally, our moving averages that we follow, we are above them, all of them. We have closed above we are on pace to close above our 5-day EMA in dark blue here, our weekly EMA, near about 585. They're diverging apart from each other for the most part here, so looking like more of a positive trend based on these indicators.
All right, as we look at MSCI right now at 585, pretty much unchanged on the day. Jessica, I want to thank you for being with us for Big Three today and for highlighting those
SMCI.
talk about as much. Jessica Inskip from stockbrokers.com, and of course Rick Ducat, our technical lead analyst, for breaking it down for us. Coming up next, we are going to spotlight Clean Spark. We'll be joined by the Bitcoin miner CEO to discuss how AI has reshaped the company's business. That's next on Trading 360.
Break to 21.
Stay connected to the markets with Schwab Net.
Anybody take the trade with me? You can get out with $100. Jim, you were up $130. Why didn't you take your profit? Because I'm hungry. $720. Are we going to go higher or what? I ain't got to take profit. Fake sell. I'm out. My eyes have seen the coming of the terrible swift sword. He's biting out the vintages where the grapes were rather stored. Chase it down with a nice cup of coffee. Trade number 6. Trade number 6. Can anybody tell me if that was a fart or a burp? Can anybody tell me if that's a fart or a burp?
Sounds like a burp song. I can make up a burp song. Burp, burp. Okay, let me get my guitar into it and I'll make up a burp song. I drank too many beers tonight. Drank too many beers. And something just ain't right. I feel a big bubble deep
down inside of me. Goodness gracious, what could this be? I've got a burp song. Gotta get a burp.
Gotta burn my way to your heart. Last night, drank one too many margaritas. Last night.
Well, I just had a salad. It was turning my tummy. Something just ain't right down there, but it sure was yummy. I tried to catch my breath. Just one more time. I had to just let it unwind. Well, it's my burp song. I'm gonna burp out loud so everyone can hear it. Well, I was out at a Mexican joint last night and I had a mahi-mahi taco. I looked at the waitress and I said, something turning in my tummy. So I asked the Mexican, what's mahi-mahi in Mexico? He said it was a carp, a carp's tail. Well, I had a burp. I burped in his face. I said that was gross. So my mama, she fed me, and she put me over her shoulder. She started tapping me on the back. I said, watch out, Mama, I'm getting ready to burp. All of a sudden this green mucus started coming out my mouth. It was a burp. I had a chug of beer. A friend told me to down it. My tummy was starting to turn again, and I said, damn it. I let out another big burp. This is my gratitude for getting drunk. So I was hanging out with my girlfriend when I was 6. We were out picking up sticks, and I found this worm in the ground, and I told her I was going to eat it. Well, my tummy started wiggling, and it started jiggling, and I let out this big old burp. Well, this is my burp song. It'll last about 3 minutes. Let's burp together. Boom. If she can sing a burp song, so can I. They're now at $8.30. I burped, and I burped, and I burp. I'm not scared. There she goes. There she goes.
Hey, there she goes. Just walking down the street, I suppose. The next fellow that she meets should have her head examined by X-ray machine so he can see all those pictures that I already seen, just so he knows. Hey, 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 there she goes. Hey, there she goes. Well, there must be something somewhere that makes me wanna hurt myself inside. Yeah, we were regular Dr. Jekyll, but together we were Mr. and Mrs. Hyde. What a rough ride. Hey, there she goes. She's walking out on me with all her clothes. Looking fine as she could be. Well, I seen her on down at the courthouse. I was sober as a judge. We tried to talk things over, but the grudge wouldn't budge. You said adios.
Hey, hey, hey. There she goes.
There she goes. Hey, there she goes. Well, there must be something somewhere that makes me wanna hurt myself inside. Yeah, we were regular Dr. Jekyll, but together we were Mr.
And Mrs. Hyde.
What a rough ride. Hey, there she goes. Well, I thought she'd never leave, heaven knows. You know, sure gives me the creeps. Well, you know when love that a woman to the power of a hat. We both got jiving, feeling screwed out. Heads up tight.
There she goes. Hey, hey, hey. There she goes. There she goes.
Hey, there she goes. Hey, there she goes. Hey, there she goes.
Okay, back to business. One more belch for the road. Now we have the 9 crossing over the 21, running up into the 63. This time we broke it. Last time we did not. So we're getting ready to squeeze in any second for a new high. Who's with me? The 63, 70, 65s at $5.20. 5.10. $5. Come on now. Let's do it. It's time. Oh, that's the SPX. Oh, yeah, I'm trading SPX. Okay. I've never seen anything like it in my life. This guy named Washboardjim, he's live on YouTube, and he's on trade number 7. He's looking at the 73.65s to catch the squeeze. This is going to be a strike at $4.60. 470? Yes. He's in his trade at $4.70. The position. Hey, hey, hey. There he goes. No. Well, here we go with the Head and Shoulders. Right now he's down $90. He's going to add another 2 contracts. I really don't want this thing to go any lower. 3 Black Crows. In a little too early. And after this, I'm going into the kitchen to wash dishes. I think that's enough coffee for me today. 470 and 370. No. Average 420, Randy. Doo-dah, doo-dah. You're down $200, James. Have you thought about selling? No. AMD new low. Hike. Well, they stopped calling after I didn't stop answering their phone calls. I should have not jinxed myself. You're down $40, Jim. Have you ever? You're down $20. You're down. You're even. You're ahead. You're up $20, James. Can we break it, please? You see this here long leg doji? That's kind of like a dragonfly and a hammer. More like a dragonfly. And that's a doji. Please break the 21. You can get out even if I wanted to, but I don't. Right now you're up $40, James. Have you ever thought about selling? No. $73.65 calls at 470 and 370, and it's now at 430, 420. And I'm going to go into the kitchen and grab, oh, I got water, but I'm done with coffee today. There we go. Come on. You're up $100, James. Hey, hey, hey. There he goes. $540. How does he do it? Come on. Lord, do you remember when I gave that bullfrog mouth-to-mouth resuscitation? Anybody ever gone frog gigging before? Okay, you ready for this? Time to poop and learn. We're now at 550. I should sell it. 520. Plants can hear sounds. Studies show that plants react to certain sounds. For example, some flowers open faster when they sense a buzzing of bees, like the Venus flytrap. Others change how they grow based on vibrations of the soil. Plants do not have ears, but they have sense pressure that reacts in ways that still seem like science fiction. Plants can hear sounds. Ants. Ants do farm work. Who has not had an ant farm? Certain species of ants grow their own food by farming fungus. They cut leaves, carry them home, and feed them to the fungus, which grows in their nest. Then they eat the fungus, and these tiny farmers have had special ants that clean the crops and protect from the pest. Ants do farm work. Octopus. Octopus skin sees light. An octopus can change color without using its eyes. Its skin has light-sensitive cells that help it detect changes in brightness and adjust accordingly. This gives the second way of camouflage. Even if it cannot see what is behind it, it is like having eyes all over your body. Octopus skin sees light. And final, burp. Washboardjim burps at will, usually after a good salad or a big meal. He feels his tummy roaring and then lets out a large sound that sounds like a nuclear bomb. Jimmy can burp. That should have been fart. As Jimmy takes a shit, sometimes he let out a big fart in the toilet seat. He can't run from it because he's got a big turd hanging out his butt. That was quite interesting, James. Trade number 7 is down. Now he's going to be working on trade number 8. We have a falling wedge on AMD. Oklo has hit support. We've had 5 red candles on the 30-minute time frame with an inverted hammer. Can I see it? Can I see it? Aluminum, 2 bits, 3 bits, 4 bits, and Phoebe with an inverted hammer, almost like a gravestone. If that holds that previous body, we can move up. Oklo. No, I'm not trading Oklo. Did you like that? Did you get out of it? Or did you trade it? What happened when we hit 420 yesterday? We had a big boom. Randy. Could trade this again, but I just don't want to rush myself. You don't want to overtrade. Out and about. All right, you got your radio on, listening to me in the car? What's your wife think of me? Tell her I'm single. I can't do that, Jim. She'll run off from me. I've been with her too long. Oh, you're outside? Okay. Looks like we're trying to break resistance on AMD. Hey, AMD breaking resistance. Oh, I need to call somebody.
Thank you for calling ATMS. We will be with you momentarily.
Let's talk about GameStop and eBay. For GameStop, eBay's board saying no deal to this unsolicited acquisition bid. Was it half cash, half stock? Kevin, your take on this one?
Here's the quote, Diane and Joe. We have concluded that your proposal is neither credible nor attractive. For me, that sounds like high school all over again. This is something that just wasn't taken seriously by eBay. And frankly, when the CEO of GameStop went on the air and tried to explain it, he didn't do a great job. Being media savvy is important with today's CEOs. He didn't do a great job of explaining. I mean, eBay is what 4 times the size of GameStop. He mentioned just diluting the stock to raise the money to do it. Well, that can't be good for shareholders. It's just never sounded or looked or seemed attractive. Now, here's the thing. It could spark other interest in eBay, hostile or friendly. That could be what the end game is here, but I don't think, we don't say never, we don't say always, but there's a low probability that it's going to be GameStop, Diane. Joe?
Joe, your thoughts?
You want to do a half cash, half stock deal for this, right? Well, your stock is down from a 86 print high 5 years ago to 22. So you're not going to find a lot of takers when you want to offer up half of the deal in terms of your own shares. And we know how all of those have been kind of given the whole meme stock craze that we saw this stock be front and center back in 2021. So, yeah, I mean, I don't know where there was a lot of synergies between the two companies. Maybe it's, look, GameStop CEO's done a pretty good job of kind of turning that around. But now if you're talking about having to dilute more shares as a way to kind of finance this deal, that's not great for shareholders on either side, especially if you're a GameStop shareholder. So it didn't seem like a marriage of equals. It didn't seem like something that would work out. And maybe that's kind of what we're seeing right now. Maybe that's what the board recommends.
I really appreciate it.
All right, let's put a pin in it. We've got Bull versus Bear coming up. The guys will get their example trades put together for Micron, which seems to be having a memory lapse today. That stock's sliding. We've got more Fast Market after this break.
Okay. Thanks very much, sir. Yeah, bye.
incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. Shares of Micron taking a step back today after a monster move in memory over the past year. Is the market reassessing demand, which is hot until it's not?
No, it's just overbought.
Or maybe it's just too crowded. Or is memory on sale? Analysts are overwhelmingly in the bullish camp on Micron. The street high target is 1,000.
I don't care what they're in.
Davidson, analysts there argue that AI has disrupted the traditional boom and bust cycle of memory, creating a structural shift that will sustain higher pricing for several years. Deutsche Bank also recently matched that target, so it's not a lone wolf still. Not every analyst is on board with the 4-digit price tag. On the more cautious
4-digit
side,
price tag?
Sachs has a target of 400.
What?
All right, time now for the tug of war on.
You gotta be kidding me.
Back in our co-hosts Kevin Hinks and Joe Mazzola. Guys, it is bull versus bear time. So before we get to your example trades, we got to get your thoughts on Micron. Joe, I'll start with you. Your take.
$1,000.
Say something that's downright shocking after a 60% rally in the last 3 weeks. The shares might not be expensive. Now, nominally, absolutely, right? You go from what, 540 to 830 or something like that as the near-term high, or 820, excuse me, as the near-term high. That's what we call a parabolic move. It's not something that happens very often, and there's a good chance, if not a strong chance, that you see a bit of a retracement in the shares. You're seeing that down today about $70, and I wouldn't be surprised to see even more, just kind of given the fact that you saw this thing move so quickly. But,
How about 550, 562?
When you're looking at growth stocks, especially a company where revenue and earnings growth have also kind of been exponential, and they're in an industry where there's high demand, low supply, and they are at the forefront in terms of delivering that, and that's the memory product. A PEG ratio on this stock right now, believe it or not, given the rally that it's had, is still under 1. You know, it's around 0.5. So the price divided by earnings, right? So the PE divided by the expected growth rate over the next 3 to 5 years is under 1, and that's, you know, traditionally by fundamentalists that might be considered relatively inexpensive, but I use that word relatively, right? Because we've just seen such a monstrous move in this stock. Here's an example. In 1 year, the stock has gone from 90 up to 830. And what I did is I looked at the Fibonacci charts on this, and I drew it from the low from 90 up to the high that we saw right before this last big move, and that was around 540. So that's the 100% on the top and the 0 on the bottom. You get that move, the extension that takes it up. That extension took it all the way up to the 18 level on the nose, right at that 161.8%. We hit that. We've been pulling back a little bit. You know, today's move is a pretty wide candle. It's got down to just about the halfway part of that big green candle that we saw 2 days ago. I think if it holds there, it probably, you know, can consolidate a little bit. The stock could definitely use some consolidation given the move that it's had. But if it kind of moves past that latest green candle and makes its way back down, I wouldn't be surprised to see a 650, 600 test, something within that range, because just because of how quickly the stocks move to the upside. And here's the thing, that might actually be okay, as long as, you know, you're not somebody who bought it yesterday at the high. This might be an opportunity for you to kind of get back into, or, you know, if investors are interested in getting into this stock after a pullback, given this meteoric rise.
Not happy if you bought it yesterday, but who knows where it can go from here. Kevin, your thoughts?
You know, I think this is a classic definition of peak cycle risk, right? Because remember, Micron is in many ways trades and acts like a commodity. And right now there's bottlenecks, there's tight supply, and that leads to higher prices. But you come to 2027 and 2028 when more capacity expands, and these prices are going to come crashing down, and these bottlenecks are going to loosen up, and this thing could trade like the historical commodity that it has. And so that's the concerning part. Now, AI demand, it's off the charts. Demand for memory with AI is off the charts. But remember, it's demand and supply. If all of a sudden, come 2027, there's this large amount of supply, these prices are going to come down, and their margins are going to come down, and things are going to look a little different. We're not there yet, but it was an 85 on the relative strength indicator. Now it's still a 71, even though the stock is down 9%. It's still above 70 on the relative strength. So this is just a stock that was overbought, and eventually there's going to be less tight supply, less bottlenecks, and so you just got to be prepared for that. Joe's right. It's run from 90 to over 800.
So let's get into the example trades. Joe, let's start out with yours. What's your approach today?
It's I sold a put spread, so it's considered a bullish trade. I gave myself a lot of room on this just because the expected move in the stock is just gigantic right now. I mean, just look at the 3-day expected move for the stock is $62 up or down. Well, we moved 75 today, so we've already exceeded that 3-day move in the first half of the trading day. So it's a volatile stock, but it can explode to the upside too. So what I looked at particularly was the June 26th, and right now I think expectations are for Micron to release earnings that week, I believe on the 24th. So there's an earnings trade, and I'm selling the 540, 530 put spread, so vertical spread for about $2. So basically, we're looking at a break even that would take us to 538. That is $180 below where we're currently trading. I know that sounds crazy, but that's basically the expected move between now and that expiration. It goes back to this idea that I was saying. When you got a stock that's moved this far, this fast, for it to come back down, take a little bit of a breather before it makes its next run up is healthy. So some consolidation at this point. I think the key for me, and I appreciate you guys showing that chart I put up there a little bit earlier, is that 21-day exponential move. That average right there, I think, is around 530 or so. So that kind of aligns with where this is. It's a little bit below where your break even would be on this, but I know that that's still a long ways to go from where we're at right now. But who would have thought a $90 stock would turn into a $720 stock in a year? So you never know.
Joe, I think this is what using the math on this Thinkorswim platform gives you. You've gone out to June 26th. So you've given yourself 45 days, but you are, very close to about $200 below where the stock is trading. In line, by the way, with the expected move of about 206. Now, it's moving very dynamically, so it could be more than that or less than that by the end of the day. But helping with that strike selection, doing a high probability trade, and this is what options allow you to do. You've got a passively bullish bet on, but you're not, you're not being a hero on this when you're giving yourself, $200 on the downside where you could still be profitable, roughly around that. So
yep,
you've given yourself
that's what I'm saying.
Probability. You're not selling something $10 or $20 below the market. You're talking about $200, almost $200 below the market. It's 180, something around there. So that is the ability that you can do using probabilities. And
I'm going to raise it up to the 21.
You collect a little less, but the probabilities go higher.
The gap,
if you were to move those
right there.
higher, the premiums would go up, but the risk would go up as well. It's just, that's the way you use the math and options and use the expected move, the implied volatility to help you there. Joe, I did something a little bit different. Mine is a bearish trade, but I looked at something I went to the May 29th, which, if you look at it, it's a little less time, only 17 days. But look at the expected move, $130 in either direction out to May 29th. $130. Think about $100. I did the 750, 650 call vertical, and then I sold the 650, 630 put vertical. I'm sorry, they're all put verticals. Bought the put vertical, sold the put vertical, doing the unbalanced put butterfly. Now, this $100 wide unbalanced butterfly costs you about $3,500, $3,540. It's trading 42 now, because now you can see how these things can move. My $3,500 is now $4,200. Now, can you move the strikes? Of course you can. The stock has moved a lot since we put these trades in. So that now you're seeing how these trades can move. But Joe, this one is a bearish play. Looking for a move on the downside. I played with the expected move there, but what I really did was look for about a $100 move. I've got some of it already, Joe.
Yeah, no, you have, and this is one of those setups where we could theoretically both be right on the trade, as long as the magnitude of the move stays within a certain level. So, you know, basically you're playing down to your short strike. That's where you want the stock to go. That's where this thing maximizes in value. But you still got a lot of potential wins all the way down because of the fact that it's unbalanced. And with my trade, I think it can perform as well too, as long as we don't go dramatically below 540. So I think we both have a very similar thesis in that this big run up and kind of the movement that we've seen today could lead to either some consolidation or a pullback further in the name. We're not either of us. I can't speak for you, but I don't think either of these trades are calling for catastrophic moves. Where the stock getting cut in half. But I think we're both, planning on, the possibility of this thing pulling back and at least testing some of those recent levels, just given the velocity of the move.
All right, good stuff, guys. We have got cash tags coming up. Oklo reports its quarterly results after the close of trading. The team from Lightfolio will be along with new data ahead of its results. Keep it right here on Schwab Network. Fast Market will be back after this break.
I'm Samba. New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class.
You're a little over your head, baby.
To do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world, I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Don't trust him.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall.
Okay, get ready. Washboard Jim.
For our cash tag segment for that, we want to bring in our next guest, and that is Megan Brantley, Vice President of Research at Lightfolio, taking a look at Oklo, which is still pre-revenue. It's got quarterly results due after the close today. Shares are under pressure today. It's been under pressure so far this year. Megan, talk us through your latest data and what sentiment looks like for it now.
Sentiment looks great, baby.
Interesting one for us to cover because, as you mentioned, this company's pre-revenue. If you think about operational,
God, I love her.
There are none, and so for us, we really lean into a lot of investors.
Smooch.
Here. We lean into a lot of thematic views here, and I can say, just thematically speaking,
Fanatically.
levers here. We see a rising interest in nuclear energy.
That's a new word.
Large. We've seen some of that come from
Ladies and gentlemen,
remarks from the current administration. And
fanatically,
also just from consumers in general, we see a shift.
Fanatically, I see a shift. You shut your mouth. Fanatically, I'm looking at the 7360s for an opportunist here. I've gave this enough time to relax, so we're at 360. The 7360s. These are calls. If you have a problem with that, please notify your closest sheriff's department. Strike, STRIKE, 7360s. At $3.60. On the road again. That's what I'm saying, on the road again. We are now at $4.10. The crowd's going wild here at the sports arena. He's up $60 a contract. Should he sell? He's up $80 a contract. You know what? I feel a train coming.
I'd like to give you a little medley of some of the greatest train songs in the world. As a matter of fact, here's about 6 of them, and I didn't write any of them. Here she comes. Hey, look at her roll. There she flies. Eating that coal. Watch her fly. She's a hook in the ring. Hello, bound, 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 have all me. Well, the train of love is a-coming. We collect wheels are humming. Well, here and there and the bull say her happy hearts are humming. Train went to tell me, baby, ain't you got my business? Well, it was a walk, and everybody is busy. Gets the earth wrong. But everybody made up its mind coming home.
510 now, baby. I used to sing that one. Boxcar Willie. I'm still in these babies. Because I think we're going to break out. We're at $4.50. I'm up $90 a contract. I could sell them here, but I won't. Stay above the 9. It's slash ES over here. We're squeezing. We got the 9 crossing the 21. We're squeezing between the 50. And we're above the 9 over here on the slash ES to the 63 for resistance. We have a triple top at the 63. Jim, you're at $4.70. Have you ever thought about selling? No. I want to break the 63 and run it up to the 100. Now's your time to get out if you're in the trade. But if you want to stick it out with Bobo, squeeze is beginning. No. Oh. How dare you? How dare you? You're up $90 now, James. You're at $30 a contract. You were up quite a bit there for a second. You were up almost $600. No. Q-Cub's taking a beating. Now I'm down. Fell into a burning ring of fire. I went down, and then flames blew higher. And it burns, that ring of fire, that ring of fire. Love, the taste is sweet when our eyes meet. Oh, come on. How dare you? U.S. equity indices fall as Treasury yields jump amid hot inflation print. God darn it. Okay, we got a triple bottom here. Another falling wedge. Almost a bull flag. To the 200, so I'm going to stick it out for triple top. We got the triple bottom. We're in the sweet spot. Hmm. 310. No. Oh, no. Well, that was pretty stupid. I should have sold that when I was up so nice. Now I'm down 300. Could add 3 more, but I really don't want to spend that kind of money. We got a double bottom, so I'll just wait. Bilge. I'm going to go get my dishes done a little bit, and I'll be right back. I'm still in this trade. Yeah. SPY's got a double bottom. So is the SPX. That's not the way it's supposed to go. Did you get that? That's not the way it's supposed to not. Okay, James, you got to do something smart. Just stay in the trade. Double bottom. We want it to hold. I'd feel more comfortable buying the dip here. Hi. Okay, let's hold this here. 245. $2.45. No. Well, it always happens right when I jump in it. $360 and $245. Average 3.03. Well, what happened here? We got a double bottom play here on the SPX. Day low. 7338.54. We got a head and shoulders maybe. Same kind of setup we had earlier. Oak. We're at 270, 285. Come on. Break out. We're at the 21. Being very stubborn. I'm going to go over watch list while I'm waiting for this thing to turn, hopefully. Netflix is green, CMG, Target, Walmart, recession stock. CrowdStrike's up. Meta's up a little bit. In the red, we got 3 of them, 10%. Regretta. D-Wave Quantum revenue plunges 81%. This quantum stock has been a laggard. $265. We got Intel down $14. Someone asked me the other day and the thing jumped up on us. Now we're back down. And Mister's down quite a bit. Let's look at the 5-day, 5-hour, 5-minute. Almost to support, 178. Marvell STX down $61. This is another big pump. $750 all the way to $840 in 3 days. Irrational exuberance. I'm at 290. 5, 3. I'm down $18 when it was at 3. That's the SPX. I can't emphasize how much easier it is to trade the SPX than any other stock. My main reason, news can destroy a stock. One mouth, one downgrade. One stock might, there we go, we're up in the green now. I'm at $3.10. Back in the green, back in the green, back in the green, back in the green, back in the green. Back in the green, 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 back in the green. Back in the green, back in the green, back in the green, back in the green. May a circle. We're at $3.20. And back in the green. 340, oh yeah. Back in the green. Back in the green. Yeah. $4.50. Ladies and gentlemen, I'm gonna cashing out, man. $4.20. Randy out at $4.20. My eyes have seen the glory of the coming of the Lord. He is stomping out the vintages where them grapes were rather stored. He hit the 100 EMA and watched the thing break out today. Glory, glory, hallelujah. Glory, glory, hallelujah. Glory, glory, hallelujah. We're at 580. Yeah. Glory, glory, hallelujah. I rest my case, for I'm Washboardjim, the founder of the Sneaky Snake Trading Strategy. 8 successful trades today. Oh my God, they went to $6. Shit. He might want to jump back in the trade as we pull back to support. He might want to jump back in the trade as we pull right back to support. He might want to jump in the trade as we pull back support. His truth is marching on. Glory, glory, hallelujah. Damn, Jim, you're in a singing mood today. Why? So why is this a good trade? I thought we were seeing a bearish continuation pattern. I'm curious what made this a good trade. Thanks. Are we talking about the one right now? It's called a double bottom. Learning to trade from the master. Are you listening? See the double bottom? It's a two-headed snake. You move that to left, you got your left shoulder, your right shoulder, your right shoulder, and you got two heads. Then you got a double bottom. You also have a fallen wedge. It's not a very big one or clean one. And then your resistance is the 200. Mine was the 100. But if I'd have held on just a little bit longer, I would have made a good chunk of change right there. Would have made a good chunk of change. 200 times 6. Zoom out. I want you to zoom out. Have different time frames. Zoom out 5 days. And then zoom out sometimes even on the 1 hour time frame. But the bigger the time frame, the different kind of trade you want to take. Swing traders have a tendency of using a longer time frame, like the 1 hour, the daily, and the weekly. Scalpers tend to use the 5 minute and the 1 minute, mostly the 5 minute. But I use the 1 minute because I can get more, I can see more on a 1 minute. I can see patterns form on a 1 minute. And I'm a pattern kind of trader. So as we approached the 200, it became resistance. And you don't want to wait for it to touch the 200. You want to get out. You want to get out ahead of that 200 while you're still in the heat, and you can sell your call fast. If you wait till you get to the 200, it might be harder to sell your calls or your puts or whatever trade you're in. So always try to get out a little bit before your target. And who cares? You know, I left a little bit of money on the table. A lot. I left $600 on the table. But I didn't care. I was up a good $720. That's why I like trading the SPX too. I mean, it's a trend. As long as you're in the now and you know what direction the market's in, it's a lot easier to trade. I kind of tried to tell that over to a lot of people, but they want to stick with stocks. And when you're at high levels, it don't take much just to drop a stock. Just one little headline, a lot of sentiment of how they were talking this morning. They were all very bearish. Kramer saying we're overbought, we need to pull back, and they were arguing back and forth. You got fat cats that are institutional traders that trade fundamentally, and they see stocks different than what I see one at. They PE ratios and downgrades and upgrades, and stock could be on a real good roll and somebody want to downgrade it because they want to hurry up and buy they want it to dip so they can buy the dip. A lot of false information out there. Pumpers. CNBC's the worst. They bring people out there, you know, for one, the people they bring on there now are snotty, or just a bunch of snots. And they repeat the same crap over and 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 over. For a year, it was about tariffs. Now it's about Iran. And I've seen, even President Obama came out and said, I'm going to raise your utility prices. I'm going to raise your gas prices. It's going to happen. And it did. Because they had a war on oil within our own country. It was closer to us. And gas prices were a lot higher than they are right now. And that was 20-some years ago. 20 years ago. 18, 19 years ago. And they did the same thing. Biden was his puppet, and the same thing happened under Biden's watch. They had a war on oil, but surprisingly, they opened up the spigots to every other country out there. So I thought that was a lot worse than what we're dealing with right now. But the sentiment was different back then. They were like, yay, Yay! Gas is going to be a lot more. Yay! And all you hear now is boo! It makes no sense to me. So I'm always playing the devil's advocate with the progressives on Wall Street. They should be applauding like they did during back then, like they did under Biden, like they did under Obama. If they truly meant that, I should have jumped back in that thing. Now they're at 710. If we break the 200, I'm going back in. Boom, baby. We are the champions. Slash ES just hit the 200. Yeah. So YouTubers, Jimmy said once we broke this, now look at that, I want you to really check this out right here. And always remember this. I'm only going to say it 50,000 times. When a stock breaks a resistance, that doesn't mean to jump right in right there. It means to get excited, set your platform up, and wait for the pullback. If you can count to 3, you can trade with me. 1 2 bits, 3, breakout, pull back to the previous resistance, boom. If you count to 3, you can trade with me. Breakout, pull back, boom. Don't always have to jump in right at the breakout. It gives you plenty of time to set yourself up. Let's say you jumped right in it at the breakout and you're up $50 and all of a sudden it starts to pull back and you don't know about the pullback and you decide to go ahead and sell it and get out of the trade so you won't take a big loss. And then you get that, like a $500 bounce. So I said once we break this here moving average, the 100, I'm going to jump in this trade. And it came back and retested the previous resistance of the 123. And boom. Trade number 9. Number 9. Number 9. Number 9. Number 9.
Navan, the #1 rated business travel platform, lets your team book work travel in one place. Flights, hotels, car.
She's real fine, my 409. She's real fine, my 409.
My 409.
Well, I saved my pennies and I saved my dimes.
Giddy up, 409.
Before I knew there would be a time
Giddy up, 409.
when I would buy a brand new
409. 409. 409. 409. 409. 409. 409.
Nothing can catch her, nothing can touch my
409. 409. 409. Giddy up, giddy up. Giddy up, giddy up. Giddy up, giddy up.
When I take her to the drag, she really shines.
Yep, giddy up.
She always turns in the fastest time.
Giddy up, 409.
A 4-speed dual quad positive traction 409.
409, 409, 409, 9, 9. Nothing can help her, nothing can touch my 409. 409, 409. Yep, 409. Double top breakout. The crowd's going wild here at the sports arena. Nailed it. How do you like that? Learning to trade from the master. So I can't believe it. Double bottom boom. Falling wedge retest. Breakout, pull back to the 9. Still bullish, double top. This could be an exit idea. If we break the 200 on the /ES, what's going to happen? We break out, pull back, retest, boom. That's when you want to jump in the trade. Use that /ES when you're trading a SPY in the SPX. Other people use... There's not too many traders that trade like I do. I don't need AI or a synchronized indicator. I just read the charts. Every chart tells a story. All you got to do is get in there and dig and look for it. And if you can count to 3, you can trade with me. I didn't take that trade. That would have been another couple $100 right there off the 9. You listen to CNBC and Schwab. Every time the market's red, they start talking bearish. Ah, dang, man. They start talking bearish. I think they're about the stupidest people. They used to not be like that. But I think they're doing it on purpose. Trying to confuse the retail trader because they think they know it all. Now, this is what I'm thinking here. We got a double top, a little bit higher high, and we're pulling back to the 9. So this is called a squeeze. I'm going to jump in this trade. And I'm going to drop down to 73.70 so I can get a little bit cheaper. It's $7 and something here. Mind you, this might be at risk, but 7.30 or 7.10. I'm just one notch out of the money, so I'm okay with this. $7.10. This might be a little risky. Oh, shit. Might add one here. $6.30. Come on. What was that low support on TOST? I think we hit it. Oh. It was 2160. $21.60. Oh yeah, that would be see 7 up 720, 730. Break it. This will be a triple top if it breaks. Now I got to make a business decision. I got two contracts, one at 630 and one at 710. I can get out of this trade with a profit. Or am I going to break? We're at 740 now. Are we going to break the triple top and then get another grand out of the trade to 7,400? $7,400 is a little bit too high. 780? Hot damn. Hot child in the city. Running wild, looking pretty. Hot child in the city. Oh yeah. Mm-hmm. $7.70. Come on, break it. Can we break the triple top? Whoops, whoop, 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 whoop. James. Hot child in the city. We're at $8.20. Washboard Jimmy. You're at $8, Jim. Have you ever thought about selling? Oak. Well, walk this desert thinking about stonks. I'm down to my last glass of water. Will this desert ever stop? I'm still in the trade, waiting for a breakout. Got a triple top possibility. Will I ever see that deep blue sea? Is that an engine ahead of me? Triple top. Hold that 9 and that 21. I got an inverse head and shoulders, ready for a breakout. We're at 720. Watch that stakeout. Can we hold the 21 EMA? I go back and forth in different rooms. You'll see me every day. Let's break this triangle and take it to new height. I got your back, you got my back too. I got your back, you got my back too. Hold the 21. I walked this desert sun. was a stock trader. I learned from Martha Stewart when I lived in Hawaii. Them volcanoes would blow. Well, I don't know. I had a chance to be up a little bit. Now I'm still up, but not much. We're getting ready to squeeze again. Can we break that V-WAP? We're squeezing between the 9. I think it's gonna break out this time. Break out this time within a minute. You're up $70, Jim. Have you ever thought about selling? Nope. Because we're getting ready to squeeze this pretty little boy. Break that V-WAP. Break her for Zimmy. Yeah, you're up nice. I'm gonna hold longer. Break out for me. I'm the day trader. No one like me that trades these stumps. Call me the day trader. Let's take it to $1,000. I'm ready for the calls to break up to $1,000. Let's make this trade a winner, you little chicken dinner. I almost had it there. We're at 840. This is a good spot right here to take 850. Come on. I'm slobbering. 880. I mean, really, if you're in this trade and you're doing what I'm doing right now, freaking out, 890, 910. Well, we broke that V-WAP. It was a hard thing to do, but I stuck with my trade. How about you? Now we're retesting that VWAP. I want it to break. I think I've got it here. Do that beat bum, bum, bum. Oh man, come on. It's really having a hard time here. I think we can take it up to the higher level. It's right there. 73, 73, 73. Can I get it? 73, 73. 73, 73, 73. Oh, come on, one more penny. It's hard to get that 73 in there. I know how I can do it. Set the alert at 73, 73, 73. Get rid of the 1. $73, $73, $73. If I live to 73, I will live to 73. I say I've done about everything I want to do if I make it to 73. 73. 73. I saw Jim Morrison. I saw Ozzy Osbourne. I saw the Beach Boys. I saw Journey. And I've even seen Steppenwolf. I can say I've seen Elvis. I've seen Split Lip. 73, 73, 73. I've seen Iron Butterfly. I've seen Survivor. I've watched Kansas. And I've seen Steppenwolf. I've seen Bob Seger. And I've seen Leonard Skinner. I've seen Dwight Yoakam and Hank Williams Jr. I've seen Ted Nugent, and I've seen Iron Butterfly. I've seen Molly Hatchet. I've seen George Carlin. I've seen Mike West. But the best I've ever saw was retail traders. 73, 73, give me 73, give me 73. I've seen Bruce Springsteen. I've seen, what's his name? Can't think of it right yet. Willie Nelson. I gave a joint to Willie Nelson here in Springfield. He took it on the bus. I don't know what he'd done with it. He probably threw it away. I've seen Bruce Coburn's who I was thinking of. Someone called him Cockburn. I've seen Hart. And I've seen Pat Benatar. But the most of all, I want to see this thing at a grand. We're going to see 73. Come on, give me 73. I want 73. Here it comes, baby. I'm going to say take profit. Take profit. Randy. Randy. No, I've not seen John Conley. I've seen Stevie Nicks. I can't think of anything else I haven't seen. I know there's one out there. Did everybody take profit? Damn, I'm a whacked out. I come real close to hitting 73. It's amazing, James. That is trade number 10. I guarantee it, if I didn't have this guitar, I'd be just tense as could be. I've seen Jerry Jeff Walker. I've seen Tom, George Jones. George Jones, he pissed me off, man. Tried to pick up on my girl. I said, you idiot.
Bars are all closed. It's 4 in the morning. I must have shut them all down. I was scared that I'm in. I lay my head on the wheel and the horn feels cold. Neighborhood knows that I'm home drunk again. If drinking don't kill me,
Murray will.
I can't hold out much longer. The way that I feel. These old bones, they move slow, but so sure of their footsteps as I trip on the floor and I lightly touch down. Lord, it's been 10 bottles since I tried to forget her, but the memory still lingers. I hear on the ground, and if drinking don't kill me, her memory will. I can't hold out much longer the way that
Sure feel.
with the blood from my body, I could start my own still. But if drinking don't
Kill me. Her memory will. I've been on a roll today. Out at 9:40. Now we're pulling back. Beautiful trade today. This is just beautiful. So let's clean this up. We're going to look at this a different way. Like I've always said, go back and check your shit. So I'm going to show you something here. We're going to clean this chart up. And I'm going to make it real simple. Let's see if we can get a bigger one. Jimmy called this STX a little bit ago. So we got the 1 minute. We have this pullback right here. We got what's called gap. This is called a gap. So I'm going to draw a box in that gap. I always said zoom out. I'm going to break it to the bottom right about there. So we had a double bottom. That's called a gap fill. That's called a gap fill with a double bottom. So you want to take your trend line, got two different patterns in here. This is called a snake. I'm going to erase this here. So we know we're at the gap fill. We know that that double bottom is the bottom of that gap fill. And take that resistance right there and run it to that. This next one, that's called a head and shoulders. And I'm going to fill that up. That's called a snake. So you got a head and shoulders with a snake. Snake breaks out pulls back into an inverse head and shoulders. And then we've got a wedge. So we got an inverse head and shoulders after the breakout. Hits the right shoulder. And I always say jump in at the second shoulder. And we had a fake out. But we created what you call a fallen wedge. So I got an inverse head and shoulders and a fallen wedge. And I jumped in the trade here on the second shoulder. And it run up. And it started pulling back again. I got a little shook up. Then I remembered that we had a gap play. And that, come on, you idiot. What the heck? So as we started to pull back, I saw the double bottom, and I was already saw that in advance, but I didn't know about this gap. So I had to zoom out and look at it. And now I'm realizing that that's a real solid support with a double bottom on the intraday. Plus you have a confirmation of the gap, of the bottom of that gap. See right here, you extend that support line. To the bottom of that gap. And there's confirmations there also that that was pretty solid support. You got resistance, resistance, support, support. So now you got support, support, and support. That little wick. So I've got snake, inverse head and shoulders, filled the gap, double bottom. Counting the wick would be a triple or even a quad, but they didn't quite reach there, which gave me the confidence to stay in that fallen wedge. So I got all kinds of patterns here. I got the gap, I got the double bottom, I got an inverse head and shoulders, and I got a fallen wedge, which are all four of them signal a reversal play to the upside. So the second time we jumped back in the trade on the pullback, which was resistance on a 1, 2, 3, now becomes support off the 100 EMA on the minute. And I don't know how I got that resistance 73, but I got it. I got it from this right here. That's how I got it. Now we bounced off the 50. I'm getting burned out. Bounced off the 50. Boom. Exit idea. I didn't take the trade because I was too much explaining that trade. So it's called a rising Darvis box. God darn it. It's not what I wanted. It's called a rising Darvis box, or rising flag. Some call it a bear flag. Oh, man.
All invited GE Aerospace. I don't know if they're all going, but we have a few of those definitely confirmed. What does this tell you about, for investors, is this a good thing? Is this a good look?
I think it is. There's been a lot of tension between the U.S. and China that really got kicked off by Trump's announcement of tariffs last year.
Oh, shut up.
That hasn't been in the headlines so much lately, but it would certainly be nice if the negotiations, if you will, came to some kind of a conclusion that is stable for the longer term. And so I'm hopeful that President Xi, President Trump can come to some kind
Still
of
talking about
ground
tariffs.
on how the U.S. and China are going to interact for the next 4, 5, 10 years. And I'm hopeful that they can do that.
Yeah, I mean, before I let you go, I just really need to know, because you said you cut back on tech about 10, pretty much almost in half, from 22% to 10% of the fund.
Yep.
Without tech, can the S&P go higher by the end of the year? What are you planning on with that? What's your outlook for the rest of the year?
For the S&P, I really don't have one.
Right.
Because I don't own the S&P.
Okay, what do you have one for?
So,
any major index or ETF?
I think there is room for chemicals to go higher, because I bought them at a trough. And, the U.S. economy is not going into recession. So I think we were in a manufacturing recession up until about 3 months ago. So we're actually coming out of a manufacturing recession, and all of the sectors that do well with that will be fine, right? You've had a capital boom coming out of AI, and that capital boom and all the money being spent for the data centers and the power and the chips has kept the U.S. in general in a good position. But the parts that had been lagging are now coming up. So I think the economy...
I don't know if I'd listen to this guy. He sounds like a Buffett to me. I mean, Buffett would have put his... If he would have had me on the board, Buffett would be worth 3 times as much now. Because I'd stand up and say, what are you idiots? Tech is where you want to be. So they pull up gas prices in California. I don't think you can compare California with America. or any liberal city. Dang, her nipple was hard. I just saw it. There it is. AMD, is that Jimmy said we were going to break out of AMD? Look at there. Look at there. It's up $9 when Jimmy alerted it. Jimmy alerted it. It's up $10. Jimmy alerted AMD. I got to show this to my Vegas. Dadgum, SPXs are 1070 now. $11.40. A lot of these people are just scared the heck of tech. They've been like this for months. $13.70, son of a gun. $15.10. Shit. Oh my gosh. Jim. Jim. Jim, do you know that them 7360s that you had, they're at $2,300? Did you see that? Yeah, I saw it. How many did you have? I had 6. Oh no, I had 6. Did you know that the 7370s that you just sold for $940 are at $1,700? Yeah, and I realized that. Jim, do you know if you'd have kept every trade that you were green on and held it, you'd probably be worth at least $10 million in the past 22 years? Yeah, I realize that. You remember that time that one trade you got in went to $176,000? Yeah, Tesla, I remember. Oh, yeah. I remember. Heck. Golly, look at them things go. Would you have thought this would have happened today? Anybody? I did. I wasn't scared. I kept buying the dips. Ain't that right, Randy?
This new infrastructure that we are building out.
Million. Wow. How long?
Washboardjim.
Oh, so polite indeed. Well, I got everything I need. I'll make my days a breeze and take away my self-destruction. It's bitter, baby, and it's very sweet. A bullet roller coaster, but I'm on my feet. Take me to the river, let me on your show. Well, I'll be coming back, baby, I'll be coming back for more. Do the thing, was singing, don't bump, but then, but that was someone I'm a Congo land. Lacking up a bit, but I went out and never said my pleasure, I'm much better, but I won't regret it never. Where I go, I just don't know. I got to take it slow. When I find my peace of mind, I'm gonna give you some of my good time. Where I go, I just don't know. I might end up somewhere in Mexico. When I found my peace of mind, I'm gonna keep it for the end of
Time. Man, that's a good song. Jimmy likes. I like.
No hikes, no cuts?
No, I think
all year?
no. I think the burden of proof's gonna have to be on the date.
We're consumers try to figure out how to be as flexible as possible. That's quite important.
Paris is number one still.
Paris is
Abu Dhabi is number 6 still, with everything going on.
Yep. So, I mean, obviously that was flight bookings that were up throughout.
And I wouldn't go to any of these places.
Earlier in the year. But one thing that stood out to us, particularly about Abu Dhabi and more broadly in terms of the
I wouldn't go to any of them.
big parts of India as well, is how much
Maybe Hong Kong, but
has been moving into those markets. So
Girl.
we created a measure that looked at the percent of corporate travel relative to the amount.
And
Oh,
what you
man.
find is corporate travel's where the money is, Michelle. Those are the people paying the big bucks to sit up front, I'm told.
Well, that's part of the story, yeah. But you certainly see a big shift. Abu Dhabi was still high on the list, but India
Addis Ababa.
I wouldn't go to San Francisco. I wouldn't go to any of them places.
It's the direction of travel.
Oh, God. I don't see Jamaica on there. I don't see Mexico on there. I don't see Punta Cana on there. I mean, I don't see Asia on there. Those are the 4 places I would go. I mean, no, these people,
Activity, we're still in that spending, but it's shifting. I do think there is an important point around the reorientation, the reallocation of purchasing power, particularly when it comes to travel. But the other thing that I think is really important that we observed in our report as well is the influence
Your
of
report
technology, the
sucks.
influence of AI, to help consumers navigate this period of time. So if it's the case that traveling to one market doesn't seem comfortable or prices are not allowing for it, where else can you go? And how do you use technology to do that?
As someone that travels arguably almost weekly,
Yeah.
By car and by plane and by train and by bus and by whatever method. Okay, I'm gonna say something, it's a hot take, a lot of people disagree with this. If gas price increases kill travel,
It's not the gas
it's not the gas prices. And I'll tell you why. While gas price increases certainly impact a lot of families, not denying that whatsoever. If you know the price of hotels over the last 5 years, you do more than anybody, Michelle, right? The trends in hotel prices, the trends in food prices, the trends in flight prices, the trends in travel insurance costs, should you buy that, they're all up. To me, if gas prices break the economy, it's because it's the last straw in what's already been a massive inflationary cycle over the last 5 years.
There you go. Someone actually said it. It didn't start under Trump. I mean, I used to be able to fly to Mexico for less than $600. Good seats, everything. Right before Biden took office. Once he got out, it's a $1,000 to $1,200 now, and it hasn't changed. It went down a little bit under Trump, but it's back up. The point is, travel went up 40% under that piece of shit.
Cocktails thrown in there. I don't know if $50 a month in gas is going.
Well, that's where it goes back to thinking about the fundamentals of consumer spending and what they look like right now. So the labor market, the household balance sheet, they're still supported. The last 2 jobs reports were
And what caused it? It was all the strikes. Everybody had a strike under Biden. Even the UPS, the airlines, everybody had a strike because of inflation was up so high. But they didn't bark as much back then. It's like all of a sudden the shit hit the fan, and I was complaining. I mean, my chicken went from $14 for $12 from 5 good-sized chicken breast halves to $32. And it went on for years. Now I'm back to paying $12 to $14. And that was my main, chicken breast and hamburger. Chicken legs, $3.99 went up to $10. A case of chicken legs, you get 20 or 24 of them in there. All of a sudden they're making a big deal out of inflation when it actually spiked bigger than I can remember in my lifetime under Joe Biden. But he's a Democrat, so they don't want to pick on him.
Canadian visits to the U.S. last year. That's much higher than Canada's official statistic that showed a 25% drop amid mounting political and trade tensions. According to the study, Myrtle Beach, South Carolina saw the biggest drop, with 65% fewer Canadians visiting the vacation spot. Power Lunch will be right back.
Oh man, this channel just gets me.
Okay, but the dollar is higher, yields higher, of course, and the VIX is struggling. It's actually down on the day now as you see this comeback coming. So the higher VIX that we've seen the last couple days coming down slightly here, but the rest show a bit of a risk-off tone. But this market, like it's done in the past, there's dip buying here, Nicole, and we're making a little bit of a comeback, only down 0.4%.
All right, Kevin Hanks, great to see you. I mean, we could set records. NASDAQ and S&P were record levels yesterday. So, if anything turns around the last few minutes of trading, stand by, right, folks? Thank you, Kevin Hanks. It's time for our ETF watch list segment. Joining me right now is Eva Ados, Chief Investment Strategist at ER Shares. I'm so glad You are with us. You and I have known each other a long time. And in this case, people are so excited for SpaceX. And in your fund, 20% of your fund,
yes,
SpaceX.
Yes.
Oh, tell us more about it.
We have a super strong conviction in it, and I'm going to explain the history. So we are the first ETF that added private equity exposure to it. And that came naturally to us because we use what we call the VC lens to the public market. So we analyze public stocks like venture capitalists do. And so our VC lens led us to this because we realized that companies are staying private for longer. And in order for us to capture all the value creation that happens before the IPO, we are missing that out, right? So there's a lot of value creation that happens before the IPO that didn't traditionally happen that way. And so that made us include private equity. And out of all the private equity positions that we analyzed, to us, SpaceX, what we believed will be the next Magnificent Eight, and what we believe the elite Magnificent Eight.
So if SpaceX takes off the first day of trading, do you get like an early price up?
So here's United Airlines. I'll take that flight. 6:15 to 12. Basic economy. So I'd take the 3:30. I wouldn't get up in Cancun, I wouldn't get up at 8 o'clock. I mean, 5:30 to leave. I'd leave right here. And I'd actually want to be back. That's late. There's not a good flight on here. Man, look at that. 9-hour layover. There's nothing in here. Can't believe I can't find flight back. I'd hate to take that one. Just if I had to come back late, but by that time it'd be too late. I want to be here by 9. There's just not a flight in here. I'd take that one. But let's just say that's the second one. I mean, that's if I wanted to come late. I mean, 11:30. I'd have to stay up all night. So it cost me $1,200. And if I took through Expedia, that's United. Maybe American Airlines would be better. I'm looking at these every single day. Cancun's the cheapest one. Jamaica's a little more. So I'd take that flight. Now we're talking here. I'd probably want to leave right about in here. Well, that's pretty reason. Well, no, I want to get back early. Damn. That's cheap. That's cheap. That's what I was paid before Biden. Wow. I'd do that trip. I'd do that trip. Might just want to book it now. So that cost me $15.48. I think I'd get a ride. Private minivan. $16.26. Ain't too bad. But I mean, the hotel costs a little more.
Bro from another show helped me out with these trades. So
we came back to the previous resistance.
The assist there. So first trading question, Bank of America here.
This happens all the time. They pull back to the previous resistance. I took Cody out to dinner yesterday. He told me that you're trying to teach him table manners. That's funny, so am I. I'd be sitting next to him and all of a sudden he's yelling out top of his voice and I'm saying, I'm just right here. You don't need to yell. If you can count to 4, if you can count to 5, you might take nosedive. But again, this market's very bullish. No matter how bad they were talking this morning, it's very resilient. Anybody can make money in this market. Almost anybody. I mean, I've had 10 trades. I'm blown. I'm exhausted. If I wasn't fucking joking around, messing around, I would have probably even took that trade right there and got in and out. How clean it is. It's real clean. It's not very respectful. Everything respectful. Breakout, pullback, fallen wedge, double bottom, pullback, broke out, created a channel, broke out, pulled back to the previous resistance. Just a very clean chart. They don't seem like it at first, you know, when you're watching it go down, but once it breaks out, we tried it right here. But I recognize the head and shoulders, that's why I put that there. Then you got the gap fill. You got a megaphone. Higher high. Higher high. Well, yeah, lower low. Lower high. Still a megaphone. With a triple bottom. And a triple top. You got the body, and the body. And a wick, and a wick. And I go off the bodies. TSM's down $5, $9. $184 at the beginning of a year to 420. There's that 420 again, V-Whopper. Randy. We've had a heck of a run. You know, I've never been so bullish in a market in the 22 years I've traded. And I don't believe half this crap, these headlines. Tempted to book that flight. It's cheap. I noticed there have been some deals going on. coming back a second time here. I don't know if I want to take it now. We got 1 minute to power hour. I'll wait for the VWAP. You got to stop swinging, I'm telling you. I'd stop trading, period, if I was losing that kind of money. Oh, I'd go in big. The way I trade, I'd go in big. And you might be more disciplined with smaller accounts too. Yeah, I'd slow it down. I mean, I could trade that, but I keep it small because I'm in here in this room. If I wasn't in this room, I'd make 5 times as much. I'll be doing the same thing, playing my guitar and singing and yakking to myself, taking breaks. So let's see what Musk says here about taxes. Well, they took the picture of him with his black eye. when he got in a fight. Can you imagine being depressed and having all that money? I don't think I would be. I know I wouldn't be. I know another guy that made a lot of money here recently, and he got depressed for a couple of years. One of my nephews just a couple weeks ago, he's not told me, but he's told everybody else that he's mad at me because I wouldn't give him money 20 years ago. And maybe I didn't have it to give, because that was back during the Obama years. I mean, that was rough. It was real rough. Well, yesterday, the end of the day, I made $800. And we're getting ready to flag out again. We got a double bottom, and we're breaking out again. This could be it. Oh my gosh, the 6370s are at 1690, 1700. So the 7390s, get rid of them. New high. I was about ready to jump in at 270, and it broke out, and then it came back. $2.85. There's 330. Get out of them now. Let's see if I can get a little bit more. 350, 360. Yeah, take it. Hit 370, out at 360. Times 5. So now we got a megaphone. So I took that to that resistance and got out of the trade. Enter it right off the 9. Boom! In and out in 2 minutes. 2.5 minutes. $75 times 5. I can do this all day long. I get stuck in a couple trades and still worked out. That's called a megaphone. Yeah, by the end of the day, we could drop. Now we're above all the moving averages. We were below all of them. Down here, the 9 crosses, then it respects the 9. And then it started respecting the 21, then called it off to 50. Triple bottom. Boom. Look at there. Oh, that's earlier. Oh, God. Now they're at $4. Jesus. Now they're at 4. So the previous resistance became support twice. 3 black crows with a tweezer bottom. Boom. To 440. Ugh. Oh boy. There's another $500 left on the table. $490 now. $650. 700. 750. Oh God. SPX is the way to go. Now they're at 590, 610, 630. $670. Oh, I can't take it anymore. $690. $730. Oh, damn, Jim. I just left $2,000 on the table. Good job, Randy. Now we got a bear flag. Look at that, that's not even going to affect it. I'll make you a bowl again, Randy. I'm going to make you a bowl again. Not smoke a bowl, make a bowl. I'm going to write a song about the 200 SMA. If you can't trade it all, follow Washboardjim. Jot down the 200 SMA in any time frame. Once you watch it for a while, that 200 SMA will really make you smile. Just watch old Washboardjim trade it. You can look at the weekly, you can look at the daily, you can look at the 1 hour, 5 minute, 1 minute. There's a trade always waiting for you. If you keep an eye on that 200 SMA, I guarantee it'll get you a big payday. The 200 SMA. I'll take and trade it all day. I just left $2 grand on the table. Does that make me sad? Not at all. Trade number 11. Take it off the 200 SMA. I'll trade it every single day. To the 500. Look at that. The 200 SMA becomes resistance. Well, we watched that, as VWhopper said, it went sideways for about 7 minutes. Then it ended up having 3 watch soldiers to the 200 SMA on the 5-minute time frame. If you pull up the hour, now the hour, it's way down here, so we'd have took it off the 50. We had 3 black crows to the 50 SMA. It held for about 3 hours that same old way. So that triple bottom after the crows would have minted that money your way. So we had 3 Black Crows at opening off the 50 SMA with a tweezer bottom with 3 white soldiers. Look how pretty that is. You got 3 Black Crows with an inverted hammer with a tweezer bottom off the 50 SMA. Boom, 3 white soldiers. 3 Black Crows with an inverted hammer followed by 3 white soldiers off the 50 SMA. And then on the daily, I mean, this is really tripping them people out on Wall Street. Okay, we're pulling back here for another trade. We bounced off the 50 earlier. It could bounce off the 21 right here. Go fuck yourself. Go blink yourself. I'm sick of your calls. I'm sick of your calls. Can't you see I'm live on YouTube? California mayor charged with acting as a legal agent for China. Wow, look at AMD. We got 29 minutes left. And I'm really overtraded today. Beautiful resistance triple top. I'm going to do another video. I had one guy tell me on a Twitter that gap trades are fake. Prepare ye in the name of the Lord. Hello, my name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And I talk about the same stuff every single day. So I want to point out today was a lot of propaganda out there again. If you listen to CNBC and listen to Schwab, but CNBC is just like a socialist channel anymore. They're coming in on that bearish crap this morning. And I'm never bearish, I'm always bullish. So we had a pullback first thing this morning. Now this is on the 5-minute. So I was looking at the 1 minute. I trade mostly when I'm scalping trades with the 1 minute time frame. So we had this big sell-off. And I'm going to chart this out for you. I'm going to show you where the snake is. I'm going to show you where the breakout is. I'm going to show you where the pullback is. And I'm going to show you where the boom is. And I've made 11 trades today, and I could have just made another one, but I decided to go ahead and do this video. So I'm drawing out this snake. The snake is a knife. And I recognize head and shoulders. So I go ahead and draw this out. Just like that. So that's called a Darvas box. That's called a bull flag. It's called a descending knife. We have a head and shoulders right here. So as I was starting to break out of this thing, we had a pullback, and then we created what you would call an inverse head and shoulders. So I'm going to draw that in here. You have your left shoulder and your right shoulder. Also in the same pattern, you got what you call a fallen wedge. Started after you had the breakout and we had that pullback to the right shoulder the second time, was maybe the idea to take this trade. Well, it did start to break out. We broke out of the channel right here, and I tell everybody to wait for that pullback and then take the trade, and it pulled back to the previous resistance level, which was a head and shoulders. Real clean, real simple, real easy to understand. So we jumped in the trade on the pullback after we started creating this fallen wedge. Then plus we had an inverse head and shoulders. And then she broke out a little bit and came back down, and I recognized what you would call a double bottom. So I zoomed out, 5-day, 1 minute, and I noticed this big gap in here. This is called a gap trade. So I needed more confirmation to take off the double bottom, and I zoomed out. So I'm going to fill this box in right before, because it gets kind of blurry. I'm going to take it down to that candle right there. That's called a gap play. So we pulled back to the bottom of that gap. Now if I extend this out farther, I need just maybe one more confirmation. So I'm going to fill that gap with a price line. And there we go. We got another confirmation of support, support, resistance, 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 and resistance. And then that fills in that thing there. So we're back to the day here on the 1 minute. We've got a fallen wedge. We've got an inverse head and shoulders. We've got a double bottom, and we got a gap fill with confirmations of the solid support, even zooming out farther. So we took the trade and we added on, and we run it up to the top of that gap. and that was an exit idea. She broke out and then she pulled back and respected that gap twice. Off the 21. Now we're using the 9 to stay in the trade. But I took profit on the top of that gap. So we had a double bottom on that gap, on the top of that gap. Then it runs up and respects the 50 all the way up. So every time it pulled back and bounced off the 50, you were able to scalp that trade. So we had a guy in the room looking at the 5-minute. So he's sitting here calling this trade out. We had a resistance level for about 8 minutes. And then it finally broke out. He even said when it was going to break out, and it popped right out. Popped right out. It respected the 9, which means we're still bullish in this trade as long as you're holding that 9 EMA. And then once it broke out, we had 3 white soldiers all the way to the 200 SMA. Now I've always talked about, if you go back, there's probably video after video after video of me using the 200 SMA as a support level and as a resistance level. So when I started doing this video, we pulled back to the 9 with another hammer for another entry idea because it respected this 9 all the way up on this 5-minute time frame. And then we just had another pop past the 200. So now the 200 SMA becomes support because that was the previous resistance. It's matching up with the 9. So it's either going to be the 9 or the 200. Now you're getting late in the day and you don't want to take as big of a risk as you would throughout the day. As the time starts to collapse, you want to be a little bit more careful, a little bit more diligent with your funds so you won't get stuck in a knife in case they just want to sell this off. Now there's a lot of negativity out there. A lot of fat cats are sitting on the sidelines and doing their best to try to calm this market down. I've never been so bullish in the 22 years that I've traded. I mean, I'm not lying, I'm not fibbing. It's in video after video after video where I say this is the most I've ever been so bullish in the market. So every dip is a buy. And all it took today was a lot of patience. And I was scalping on the way down, I was scalping on the way up. Just remember the 200 SMA, remember the gap. Remember one thing, before you get into a trade, you need more than just one confirmation. It's either from a chart pattern, a moving average, or being in the now. Right now, there's a ton of bears out there that are very experienced, so-called experienced institutional traders that are trying to talk us out of playing the market the way we're trading it right now. I mean, just constant. Oh, we're overbought, we're overextended. It's just natural to have that feeling when we had such a big run. But I'm thinking every dip is a buy. I'm not going to sit there and listen to them tell me we're going to go down to $200 or $300 in a stock. I'm going to be jumping on these trades. We've had some hellicious runs, ones that that worry me some, but I'm not as worried as I have been in the past. For one, we got SNDK, SanDisk. This stock has been a great Friday trade. Last Friday, boom. And it's pulling back, setting up for that trade again. But if you look at the weekly time frame on this, we've had a run from 2789 in the 3-year period all the way up to $1,600 even. You look at the daily. They even had this morning on CNBC, they were talking about how bad AI was. How bad AI is. They want to bring this market down so they can get in on the dip. Buffett's all cash. So they're coming out saying, you know, the Buffett theory. If he's all cash, we should be cash too. I don't listen. That old man doesn't even have a computer. He doesn't even know how to use a computer. I mean, have it make sense to me. It doesn't. It makes no sense at all to me. So here on the daily, we bounced off the 9 today, and that would have been a good trade to take. I've been saying wait for the 9 to take the trade. Boom. We had a big bounce off that 9 EMA. But this is a SanDisk, and it's had one heck of a run. $35 this year alone, all the way to $1,600. So I'm expecting this thing to pull back even farther than what I got these alerts set at. But for right now, if it doesn't hold the 9 and it starts to go below the 9, I want to look for the 21 and try to catch it off that and scalp that trade up, or wait this Friday and take it Friday like I did last Friday where I made a ton of money. So I just wanted to say in this video alone, you need more than one confirmation when you take a trade, and the 200 SMA has been a beauty. Let's see what this looks like on the 1 minute. Support, support, resistance, 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 support. Failed it. Today when we hit the 200 SMA on the 1 minute, we broke a little bit over it, then came back down, and then finally broke it. And then it becomes respectful after the 200. So the 200 SMA on the 1 minute became a pivot point. On the 5 minute, the 200 SMA became a resistance level. We hit the resistance, and then it pulled back, and then now it became resistance again, the 200 SMA. On the 1 hour, it's probably way below it. We pulled back, we hit the 200 EMA with a tweezer bottom. Could have took that trade off the 200 this morning. Run up and hit the 100. That's on the 1 hour, 15 minute. We have an inverse head and shoulders. So we got a snake, looks like a wedge, but actually a snake. So we had a snake breakout, and on that breakout we had an inverted hammer with a tweezer bottom. I would have took that trade, run it up to the 21, and got out of it. Then we end up hitting the 63, the 63, the 63, the 63, the 63, and the 63. So along with this lesson about the 200, you follow the moving average that it respects the most. The 63, 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 and the 63 for a resistance level to know what you want to get out of that trade, as it respectfully respects the 63 EMA. That's on the 15 minute. So I've been accused of just trading in 1 minute. Well, that's not the case. I got different time frames that I look at every single day. Not all of them, but I look at them a lot when I'm looking at a trade to try to give me confirmation of, is the stock bullish? Are these different time frames telling me that the stock is bullish? Which a lot of times you can tell maybe one of them might not show that, but a lot of others might. So if you got 5 confirmations as I go through my major time frames and 4 of them are a hit, I might be taking that trade. So I could tell you a lot more, but I want to make this short and sweet. Actually, it's not that short. Been going on for a little bit. But yeah, different time frames. Use the 200 SMA. Just follow the moving average that it respects the most. And that's where you're going to find your resistance levels and also your support levels. And if we do break that time frame, like if we do break the 63 here at the end, that now will become support as a pivot point. So we come in here tomorrow and this thing breaks up to the upside and comes back on the 15-minute time frame, I'm going to be looking at that trade to take that trade off the 63 because it respected it so many times within a 24-hour period. And that's it. That's the sneaky snake trading strategy. We talked about gaps. We talked about snake breakout, pullback, boom. We talked about the 63. We talked about the 200. We talked about the 9 EMA. We talked about the 200 EMA and SMA. And we talked about the tweezer bottoms. We talked about an inverted hammer. Keep an eye on them candlesticks as it starts to break out of that knife. And just be patient and wait for the pullback. Once it breaks out of that knife, it's going to pull back, and if it respects the previous resistance on that knife, you have a good trade to take. You go in small, then you add on. That's why I add on, because I have confirmations to add on more trades and make more money and get out at a lesser time instead of going in small and trying to hope that I'm going to make it big. At least I can get a short, easy scalp at it and make $400, $500, $600 a trade. So that's it. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. The 73.90s are at 1620 now. I called them out at 285. Judge.
But you know, you have to think about
AR
technology so much.
MK.
It's a large component of our, non-residential business investing in our country, and you have to think about housing and feeding workers who are building these data centers, and that's where Aramark, I think, is got a positive catalyst, as they denoted in earnings, and is also, as you pointedly denoted too, Sam, in our conversation.
Yeah, I mean, obviously, it's got a bit of an AI ring to it, so that's obviously what's benefiting things here. George, really appreciate it. Thanks so much for getting us across this one today. Trading up 9% currently in the market. All right, Molly, I'll send things back over to you in Chicago for now.
Thanks so much to Sam and George for that one. We are nearing the end of our market session. Kevin Green will be joining us to break down the levels he's watching on the S&P 500, as well as today's action. That's all next on Market on Close. Plus, we've got earnings from Oklo.
Data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome back to Market on Close. I'm Sam Barnes here on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. We've just got a few minutes left in today's session. So let's welcome in Kevin Green, Senior Markets Correspondent, to help close out the day. KG, we're coming well off the lows here. It looks like the S&P 500 is trying to go green right now. We've already seen the Dow pop its head into the sunshine. A nice day for healthcare. Just walk us through some of the levels you're watching.
Well, I would say this is a little bit more of a rotation day if you're looking at the outperformers, a little bit more defensive as well. Healthcare, consumer staples, and energy moving to the upside. But we have been able to recover off of the lows. And looking at the 7,400 level as your key major area of resistance, if you're just looking at the volume levels for today going into the close, so that could be actually a pen risk area. And what's actually very interesting, we got to around 74.09 or so. Started to see some selling activity taking place in the E-mini S&P 500 futures to really try to knock prices down. So let's see 7,400 as our pen risk for now, and obviously we don't want to see a reversal going into the close. But this is actually a relatively strong day if you kind of look at the rotation. At first we started off really weak, but we now have around 53% of the stocks in the S&P 500 in the green. So I think that's actually a win, especially for those that are looking for us to make higher highs and higher lows. And if you're looking at even a longer term time frame, that's exactly what's taking place. What I also want to kind of highlight here that I think is very important, we look at the daily chart here. We actually had this extension, this 1 year daily chart's going to be next. We have this extension. If you look at this Fibonacci retracement, basically from the highs of January to the lows that we saw back in April, and you look at where we actually saw a little bit of a pause, it's at that 161.8% retracement level, so extension level, if you will. So it does also kind of make sense that we did see maybe some sellers kind of stepping in at that particular level. I'm not completely, sold on Fibonacci retracements as well as extensions. It's a part of a technical analysis process, but it was kind of odd that we did see kind of that stoppage at that level. So if this is going to act as an area of resistance, you're looking at the 20-day moving average of your next area of support sitting at around 72.02. But for today, I think that rotation trade actually did hold up fairly well, and that gives us a little bit of a foundation for us to try to maintain these current levels and even try to tick higher here.
And KG, we talked about expectations for CPI coming into the report. You said you expected it likely would be a little hotter than what the expert was calling for. You were spot on in that call. How much of what we're seeing today is tied to that inflation number versus just some broadening out in terms of breadth in this tech pullback that we're seeing?
Well, there was a high bar when it came to CPI, so I was actually, I wouldn't say shocked about the upside surprise, but on the services side, we did see some components that definitely pushed prices higher, and I think if you're looking under the hood, that's where you are getting a little bit more concerned.
Wouldn't be if you're listening to CNBC.
Away from home, which is more of a services metric, the fashion that it did move to the upside so aggressively kind of gives you that first indicator that maybe services may start seeing some of this inflation starting to trickle in. And then we saw this aggressive move higher for rent, owners equivalent rent, or basically shelter inflation. So that's also going to be a little bit more of a cause for concern. We saw yields moving a little bit higher. And if you're looking at the 10-year Treasury, you can make that case that 4.5% level obviously is going to be our neckline potential breakout level. But maybe we also utilize it as an area of resistance and try to stay at these current levels. So was it a little bit of a shocker? In some respects. PPI probably will be a little bit hotter, and that's just because that's a very volatile print. But the market's been able to digest it for now. As long as you do not lose that technology theme or the semiconductor theme, I think this market can hold up. We did see some weakness in the SOX index, but it's had a really good run, so even a minor pullback is not out of the ordinary.
Yeah, obviously high yields not helping. I saw that 10-year auction was pretty average as well. Looking at levels as far as names like Nvidia are concerned, obviously record highs retreated back up again. Anything you're looking at as far as sort of individual names and levels that stick out to you right now?
Well, Nvidia is contesting this 220-ish area, and if it's able to close above and try to break through here, you're looking at around 250 as your next major area of resistance. I think there's a catch-up trade to be had there. If you notice with Nvidia, it outperforms on days where the memory names underperform, and so that's been kind of that key take there. And I also think Meta has been actually holding up relatively well.
Where the heck are you?
Negative headlines that we've seen over the last couple of weeks, Sam.
Yeah, I've noticed that inverse correlation. It's been very, very telling. So obviously we have the SOX down at 3% right now. A lot of the memory names underwater as well. Micron down almost 4%, but Nvidia managing to tread water here, up 0.6%, hitting a record high today. But we are coming well off the lows. The Dow managing to perhaps cross the line here in the green today. So we finished on a mixed note here. As you can see, the Dow Jones did manage to hang on to those.
Where the heck are you?
Right now we were looking at
Having trouble finding my.
The S&P 500 coming well off the lows as well, just down at 0.2% or so, 74.01 there, and the Nasdaq 100 also coming off those lows. It had been actually performing down over 1% for most of the day, but managed to just pick up there in those final minutes, and just with a decline of 0.9%. And the Russell 2000 also coming off the lows too. One is as bad as we had earlier seen with respect to that strength of that rotation, as KG pointed out. And speaking of that, I mean, if you take a look at the sectors, it was pointed out to me, if you take a look at the healthcare versus tech spread, that was up over 4%. So obviously that was a reversal of a trade that we've been watching for a number of years now. Obviously, technology down 1.5%.
Finally.
And discretionary was down almost 1%. You had a very mixed picture under the surface, which very much speaks to some of that rotation, as we mentioned. Industrials underwater, so were materials as part of that whole sort of AI type of trade with the semiconductor stocks, but utilities were up, and so was real estate, just on the line to the upside, as you can see here. But as we flip the boards and take a look at healthcare, I mean, this was really the winner on the day, as we mentioned. I mean, it was up 2% as far as the sectors were concerned. Energy pushing higher as well, given, of course, we did have WTI back in triple digits. Obviously, a lot of question marks around what is going on now with the state of this ceasefire, as President Trump has said that this is on life support, and we have no idea what's going on with this peace proposal right now. Obviously, Trump heading to China tonight. Let's see what the folks over in Beijing have to say about all of this. But encouragingly, we did actually see financials holding up as well. So we did see, of course, a more sort of defensive trade playing out here with the consumer staples holding up to the tune of 1.5% as well. And looking across our Mag 7 members, of course, we did mention Nvidia hitting a record high as well. Interesting inverse relation with, of course, the memory chip stocks, as Kevin pointed out. We've got Oklo hitting the wires with these earnings. Marley, so I'll send things back over to you with the numbers.
They are just releasing, Sam, but they haven't put the actual numbers out across here. So I am pouring through the report here. Obviously, this is a pre-revenue company. So as we look, the metrics are going to be slightly less important here for Oklo as we talk about them with what they're releasing here, as opposed to any milestones that they may be making as they're releasing their results here. I'm going through their presentation here to try to get this information for us right now. But it's going to be an interesting move here because it's so much more tied to what they're going to say as opposed to the actual numbers themselves when it comes to Oklo.
See, that's kind of iffy.
I'm just trying to pull up their full release. Everyone under the sun is trying to get a look at this release here as they're publishing it, because we want to know how much closer they are in their cash burn, what their loss is. Loss is expected to be a little less than 20%. Than 20 cents right now is what they're looking for, still pre-revenue.
I don't even know what Oklo is.
I'm trying to look through this report here and waiting for their news and their full doc to come through, their presentation.
I have no clue what they do.
Just now loading up here, so we should be able to get a look at these numbers here and this presentation for us, and we will read this all across in real time here. KG, I don't know if you've got them ahead of me or you were able to get
Energy. Energy Alliance.
Here, but they're releasing their tail.
God, shut up. Oklo is advancing the reactor through a strategic partnership. There's one reason why I would not trade it. Vitelli Energy Alliance, leverage AI to enhance design efficiency. It tells me nothing. Despite recent stock gains, the company faces challenges in generating revenue and managing investors. So they have a problem with revenue. It is designed to produce 15 up to 75 megawatts of electricity. Yeah, I wouldn't be trading this piece of crap. Career newsroom investors. Overview. There's a quarterly company update. The nuclear fuel recycling company, deploying power plants and provide clean, reliable, and affordable energy at scale. Is it a joke or what? Oklo publishes first quarter financial results and business update, May 12th. Fast fusion power plants to deliver clean, reliable energy. Forward-looking statement. This press release includes statements that Oklo's opinions number of unknown risks and uncertainties. As a result, the number of known and unknown risks and uncertainties, the actual results or performance of Oklo may be materially different from those expressed and implied by the forward-looking statements. So you can't rely on forward-looking statements. Okay, I got some kind of idea. 70-20 is what I have for support. We came close to hitting that. 90-day, this thing could really fall. So we got a symmetrical flag. No, we got an ascending triangle. So that's bullish. If it goes below that, that's where I got 70.72. So that's a pivot point. If that holds, we'll run back up. But this is an ascending triangle, so it's kind of bullish. I would probably took it today off that 70-20 area. Definitely would have took that there. That's the bottom of that triangle. Okay, well, I did another video there. Well, you really got to get your confidence up to trade in this market. Now, I don't like listening to a lot of propaganda. You know, if I sat here and listened to CNBC all day, I'd go nuts. And then I'm not listening as much on Schwab anymore either, because they don't know what they're talking about. The only thing I like about Schwab is at least they have 2 or 3 different opinions, and then they chart it up. And that just makes the whole difference in the whole world when trying to follow somebody on a call. And that's the way CNBC used to be. They'd have a round table and 4 or 5 would sit there different opinions on it. And then they'd have somebody come in there and chart it up, but they got away with that. And they got to pumping triple tops and double tops, and that's just not my groove. Because triple top is a bearish pattern. Why would you pump a triple top? Makes no sense to me. I would expect it to pull back some. If I had a chartist up there, I'd say, yeah, we're bullish, but we just hit a triple top, and we got to pull back and see if we can come up for the 4th time and break that triple, turn it into a quad. I wouldn't say we're bullish, we're going to break out, and then not give a reason why, technically. Fundamentally, she even just got through saying, fundamentally, we can't go by the numbers, we got to go by what their forecast is, what their guidance is. That's more important than the numbers themselves. And when you're at a real high resistance, you got to take that in consideration. Everybody's saying we're overextended, and they've been saying it for months. And they've been messing out on a lot of trades. Like I've said over and over again, there's been days a whole lot worse than what I'm seeing right now. I mean, I'm in la la land, wonderland, trading this market right now. But I'm still trading one at a time and being careful about what I'm doing. Yesterday, I didn't have my platform up. I could have made 800% right at open on a double bottom. As everybody else was griping and whining about how we were going to pull back, we ended up having a real good day. And same thing today. We had another pullback, and then once we broke out of that snake, it all started changing. The patterns started showing up. So my suggestion, if you're new to trading, learn how to study them 16 patterns that I've pulled out over and over again. Continuation, bullish, and bearish patterns. There are 16 of them. Memorize them. Just tell the wife, tell whoever, your girlfriend, I'm going to sit here all weekend and I'm going to study patterns. I'm going to study patterns. I'm going to memorize them. And it's not hard to memorize. You just got to take time out, put the effort in it, And I guarantee it, your profitability will triple, even double. All you got to do is study the patterns. And today I showed you a gap trade. I had to zoom out. Double bottom, intraday. Then I recognized the gap and I said, I'm in this trade. There's no doubt in my mind that I'm going to take this off the bottom of this gap. And I got so many confirmations. I got a falling wedge. I got an inverse head and shoulders. I got a gap. I got the moving average. I got falling wedge gap. A 1, 2, 3 breakout. It was just a beautiful setup. And I loaded the boat. Today I could have had another $20,000, $25,000 day if I just held on my trades. But I didn't know. You don't know. You don't know. You just take your profit and wait for another one set up, and thank the Lord that it allows you to do that, and you can pull the pivot points out and the support levels and use them moving averages and call an ascending triangles. Called ascending triangle today on IWM. It was a beautiful trade. Had a nice breakout from that. So yeah, study them patterns and you'll become guaranteed twice as good. There's not that many traders out there that I know that study patterns. And they're all fumbling. They're taking other people's calls and they don't take that effort to learn them patterns. So I'm going to get out of here. I really appreciate everybody. And just been another good couple of days. I have a couple good days like this. I'm going to slow down the next day. It was trade after trade after trade. The chart was so respectful today. And what I mean by respect, is the snake with the head and shoulders, double bottom, falling wedge, breakout pullback, just ascending triangle, respecting the 50 all the way up into close. So you could have took a trade there, trade there, trade there on the 1 minute. Respect means that it's respecting its place. It's respecting a next resistance level that now becomes support. It's respecting the flags. And we had a 1, 2, 3 breakout right here. We had a double bottom. We had a fallen wedge. We had an inverse head and shoulders. It just respected every place it was supposed to respect at. It respected the 21. It respected the 50 all the way up. It respected resistance levels. I draw a line from here. Respect, 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 respect. Respect, 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 respect. It respects the channels. It respects the support line. And that's pretty easy to follow if you just draw them trend lines out there and draw them price lines out there. It respects the gap 3 different times down here. It respects the resistance level of that gap. There's the gap right there. Respect it for a double bottom after the breakout. So yeah, I'll keep on and keep on until people start learning these patterns. That's it. Everybody have a great day. Yabba dabba doo. I got a new video out, so go back and watch it. hit that like button, subscribe, ring that bell. We'll catch you later.